All right, cool. So, yo, what's up for y'all watching this on the YouTube replay? I really appreciate y'all. Hope you're having a great Monday, and I know I am because the market's doing pretty good right now. The S&P is having an incredible recovery, up 1.3% after the pretty rough jobs report we had last week. Oh, by the way, I always get a comment on the end of every live. If you're wondering what app I'm using, or this app right here, I'm probably going to get a question about. It's in the link in the description. Should be like the first link there if you want to get this app I'm on. But anyway, let's do a quick portfolio update here. Here's my main taxable account. We're actually up 1.99% on the day. Pretty incredible. Year to date, we're up 11.5%. You know, if we go back to like April, we were down literally 15%. So all you had to do was, not sell, and you're doing pretty well right now. And the same with the S&P 500. But today's main winners is actually CEG, Constellation Energy. This is that nuclear energy stock I've kind of been talking about, and they're at an all-time high today. I can't believe it, up 126% the past year. I kind of bought the dip on them. I'm up 71%, not the full 120, but still, I'm really happy with my returns here. And by the way, here's my total percent change on every stock. Meta's having another nice little recovery day as well. So yeah, and my largest holding is at the top. It's now CEG over CSL. So yeah. Oh yeah, Google and Meta are having pretty good days. And also, here's my Roth IRA right here. Yo, what up, unboxing? Yeah, hope y'all are having a good Monday, by the way. Here's the Roth IRA right here. We are actually down in the Roth IRA today. It's because of INOD. Dang, INO is down 7%. I actually didn't expect that. We're up 24% on them. I guess they're just having like a little healthy RSI retrace. They have had a phenomenal past 5 years. I mean, look at this. You bought this stock 5 years ago. This is some life-changing money. I mean, I certainly didn't buy this 5 years ago. I'm only up 24% on my very few amount of shares, but I think this one's going to continue to be a winner. I'd maybe put this one on your watch list. I actually want to go over InnoData real quick and analyze this stock if y'all want to actually hear me out on this one. So here's a company that just reported amazing earnings, but the stock fell anyway, just probably because the PE is a little high. Like, let's see what the PE ratio is. So it's not ridiculous, actually. The PE is a 32. It actually just got to that. Yo, what up? So let's see here. What does InnoData do, you're wondering? It's kind of like what Scale AI does. And yo, what up, comrade? We'll look at Novo Nordisk as well. But look at this right here. Their digital data solutions. This has been the main growth driver in InnoData stock. Or hopefully this will load right here. Yeah, look at this. The revenue, this is the kind of stock I trust to buy and hold for the long run, a really growthy one. In InnoData, the revenue is up 157% year over year. And this is all organic. Like, they didn't acquire a company to do this. They've just seen massive demand. So if we go to the revenue right here, incredible year-over-year growth rates, up 80% year-over-year, and not just revenue, but they're actually net income positive. Look at this. If we zoom out to last year, they barely were making anything, sometimes losing money. But now look at this. They're making a couple million every quarter, and at this ridiculous growth rates. Like, look at these year-over-year growth rates. What's the net income going to be this time next year? So really cool. They're also deleveraging their balance sheet, fortifying this. Like, look, 1 year ago, the liabilities were 57% of the assets. Now, after growing their assets, it's only 34%. So anyway, I love InnoData. I do own them. I might be a little biased, but again, that's kind of one of those positions. You don't want to have a huge amount of money in them. You just want to have a safe little small position in them. And by the way, here's my growth portfolio. Let me get back to the portfolio update. I believe we're at an all-time high, which is crazy to say. We've underperformed for sure, but we're up 16% all time in here. Yeah, look at this. Year to date, we're up 26% on a money weighted average, which is really what you want to look at. Got some nice dividends too. But anyway, let's go back over here. This is my main growth portfolio. So I have a lot of risky companies in here. Like, you'll note, Toast reports earnings this week, but I got Super Microcomputers, SoFi, Robinhood, and these are like Reddit. These are such risky companies that you just can't have a huge position in them. You want to have fun little, maybe a couple share position, in my opinion. So anyway, let's keep going here. Yeah, here's my main account. We are green on the day in here. Look at this. We're up 2.10%. New intraday high right now. So up 2.10% in here. But in this account, we're only up 0.09. So we're just barely up in this portfolio. But the main winner in this account is actually Amphenol Group. This company is acquiring ticker symbol COMM. So check this out. Amphenol Group is buying CommScope, and look at this candlestick, up 84% on the day. So you can thank Amphenol from this group. And usually what you see is whenever a company like acquires another stock, usually they pay a premium and the actual acquirer goes down. But this is weird because they're actually up 3.5% on the day, because this is actually a synergistic M&A acquisition. It's going to be accretive to their EPS. So, yo, what up, Hayden? Hope you're doing well, man. Yo, what up, Jesse? Yeah, haven't seen you in a while too. And what's up, Plasma? Um, what price to buy InnoData? Yo, InnoData, I don't know, man. Um, Probably around under 40 bucks. I would really like that one. Yo, Crypto Garage said just buy XRP. Hey, we don't really look at crypto on here. But yo, Gassy, I wanted to look at NVO for you because this is like your weight loss prescription play right here. So NVO Novo Nordisk, let's pull this up right here. Sorry, my Wi-Fi's kind of buggy right now. Hope y'all are having a good Monday though. Yo, by the way, yo, Zeober, thanks so much for the rose, man. I appreciate that, man. Hope you're having a good Monday, dude. Yeah. If you got a stock you want me to look at, let me know. Let's see the Robinhood account. Yeah, give me 1 second. I'll go back to the Robinhood account. But this is ticker symbol NVO right here. This is Novo Nordisk, and this is the company that owns Ozempic. So if you've ever heard of that weight loss prescription before Ozempic, this is the company that owns it. And they just reported earnings, and they gapped down on earnings, which isn't great. And that's the weird thing because the earnings were actually good. The earnings were really good, actually, but it's the guidance that sent the stock down. Like, look at this PE right here. It's a 13 PE. That's the lowest PE it's ever traded at. And yeah, look at this. 95% of the revenue comes from their diabetes and obesity care products. So yeah, that's Ozempic. And look at this bottom line they have. I mean, this is pretty ridiculous. 4.2 billion just in the most recent quarter. They have a dividend too. You get 3.3% of your money back in a dividend. So everything about NVO, I'm really liking. So but there's one thing you got to be careful with, and that's, I read this on the Morningstar research here. They actually lose their Ozempic patent in like 2027. So that's one thing you got to be careful with. They lose their patent for that, for like Wegovy and Ozempic. So what stocks do you have? Yeah, I'll show you. I'll be really quick about this. Here's the Robinhood portfolio. Look at that. We're up 2% on the day. Pretty good. And these are all S&P 500 companies. You've probably heard of a lot of these before, like Google, Meta, McDonald's, maybe even a CEG, Constellation Energy. You know, invest in what you know. Like this right here, this Constellation Energy, we have our utility bill through them. So, hey, why not own some of them? Same with Amazon. You know, we pay for Amazon Prime and I'm always ordering stuff, so why not? Yo, Two Trig, what's up, man? What do you think of Applied Digital? Hey, what's the ticker symbol for that one again? I'll check that stock out. So Zio, thanks again for the rose there, man. He said SCS stock. Let's check it out, dude. So Steelcase, wow, look at that, up 65% on the day. So it looks like a company, if I kind of read this news line right here, it says shares climb 45% as HNI to acquire companies. So someone's buying this stock right here at a $2.2 billion valuation. So there's another about 10% upside if the deal goes through. So if you buy the stock now, there might be another 10% upside, but that's about it. But yeah, congrats if you own this one before today, man. You got to be up crazy on your position. Where are you seeing this? Hey, no, this is actually a brokerage that I'm on, Karn. If you want to get this brokerage that I'm on, it's in the link tree in my bio. That first link there, it's brokerage. But anyway, nice, dude. So UNH, APLD. APLD. Heck yeah, that's the company owned by NVIDIA. So check this out. If we go to NVIDIA's portfolio right here, NVIDIA owns a lot of stocks. You know, they own some ARM, CoreWeave, and then they own APLD. And this is the thing, APLD just had a huge partnership with CoreWeave, and I feel like NVIDIA orchestrated that. NVIDIA owns both CoreWeave and APLD, and then kind of shocker, they go into a huge partnership. But again, I like showing you the financials here, and whoa, it actually just changed it. Dang it, why did Moomoo do this? So it updated to the full year. Anyway, this is the best part here. The cloud service business, dang, they changed how it looks because of the full year thing. But anyway, the cloud service business has exploded in growth in APLD. So that's kind of why this one is growing. So yeah, they're a data center hosting play and a cloud service play. And the cloud service showed like 200% year over year growth. I mean, just ridiculous growth over there. So yeah. Yo, that's awesome, Karn. Yo, Orte said TSSI. This is a company I actually own in my Roth IRA. So I have a very small position in this stock because they're so risky. Like, look, I got 150 bucks in this stock. Wow, we're up 41%. I literally bought this stock July 15th, so not too long ago. But here's the thing. Look at this market cap right here. This is how much the whole company's worth. This is still a $700 million company. So this isn't one I'd put really a meaningful position in, you know, but it's fun having a small position because the fundamentals are so good here. So check this out. Remember, they're a $700 million company. So you can buy in this company at a $700 million valuation, and you're buying a company that's literally making a couple million now of net income every single quarter. So they're making net income every quarter at a super high growth rate. So it's just going to continue to grow most likely. And I can tell that from the the revenue growth. I mean, look at this. How'd they pull this off? Revenue went from 15 million last year to 98 million, 100 million just in the most recent quarter. That's incredible growth, 500% growth. So that's why I actually do own a little bit of this one. And are they at an all-time high? Look at that. So even though this is a $700 million company, I believe this could stretch up to maybe a billion or something, go up another 20%. Yo, FNC Media said, what app are you using? Hey, this is software I'm on. This is actually a brokerage. It's in the link tree in my bio. It's that very first link there if you want to get it. It's an affiliate link too, so it'd help out. Yo, what up, Not Fades? Can you check out the price of Amazon? Yo, I've been thinking about buying another share of Amazon. I mean, should I do it right now? Dude, Amazon, I love this company. They're just going to continue to be a winner in the long run. And by the way, the most profitable part of Amazon is the AWS business. So if you go to the operating profit right here, 12 billion of this, or really I should just go to net income, 12 billion of this net income came from their AWS, Amazon Web Services. So a lot of people know Amazon, here, if I go back here, oops. Do I got to go back further? So yeah, a lot of people know Amazon for their online store, but that's only 37% of the revenue. Then they have their third-party seller services, and the most valuable part of Amazon is actually the AWS business, the Amazon Web Services. Or in terms of, it brings the most bottom line. It's the highest margin segment of business, and it's just shown some very strong growth, but slowing growth. Like it's only up 16% year over year. They lost actually 1% market share to Google and 1% market share to Amazon, but still, 5 years from now, no one will look at this. They beat on every metric. I mean, they beat crazy on EPS, EBIT, and also, this is why I think Amazon's just going to be a winner in the long run. If we go to their cash from investing activities, Amazon literally invested $39 billion just this quarter in new assets. Or they could have acquired a new company, bought land, bought property, expanded out facilities, who knows? But this isn't money they're investing to hopefully get a good return on in the future. And this is crazy CapEx. That's the one thing also investors didn't like. So because of this high CapEx number, it made the free cash flow basically nothing. If we go to the FCF right here, which stands for free cash flow, it basically was at zero. If it'll, yeah, look at this, $300 million, or only 300 mil of free cash flow, and it was negative 8 billion last quarter. What was the company before Amazon? I think that was TSSI. And by the way, if you missed anything, best way to support me is I'm streaming on YouTube as well. So my YouTube channel is called Nathan Robert. It's in the link tree in my bio as well. So if you miss anything, you can replay it on the YouTube stream. It's on YouTube, and I never take it down. So can like replay it when it's over if you something. So what up, Plasma? He said PPTA stock. So this is Perpetua Resources. So a $1.7 billion company. The stock's done very well. So hey, congrats if you own this one. You got to be up on your position here. So let's go analyze this one. They're up 6.2% on the day. So nice. Toy said, which app is this? Hey, sorry, again, if you want to get this app that I'm on, it's actually a software. It's Moomoo. It's a brokerage. It's in the link tree in my bio, that first link there. It's a free affiliate link too. But anyway, look at this. The revenue is zero here. So this is one thing I would be careful with PPTA. If I click on revenue, it says no data because this company has never sold anything, not a product or service. So there's no revenue. And they lost 8 million, not the end of the world, because look at this absolute fortress of a balance sheet. They have no debt. And let's see how much cash they have on hand. $19 million of cash, up from 8 million. So hey, they're doing pretty well. But I would like to see them finally start selling something. Have some sales, so I would be careful about that. Hey, yo, Guran, I appreciate that, man. Hey, I sell nothing. I don't have any. I don't have a course book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. I'm just on here giving my opinion. Yeah, the best way to support me, just hit the like button. So here's THS stock. Yeah, let's check it out. So THS. So a $900 million company. So a smaller name, a $900 million name. Yeah, hey, user13, link tree in bio, very first link there if you want to get this app I'm on, software, Moomoo. But look at this. They sell beverages and drink mixes, snacking, and groceries. So maybe they own a grocery store. That's kind of cool. Let's see. Are they profitable though? So they're struggling with net income positivity. So it was negative 2 mil, negative 30 mil revenue. So this might be why the stock's kind of struggling. They're not growing really. The revenue's only up 1% from the previous year. And the net income's still negative. And let me see, cash from operation. It's actually not too terrible because if I go to the operating profit, it is positive every quarter. So they're having some weird like one-time adjustments like every quarter. So it could be like negative interest payments, like lawsuits. I don't know, but there's something heavily suppressing their net income, and it shouldn't be. Anyway, I got to do more research on that one. So yeah, the EPS looks a little artificially suppressed. Yo, Matt said, ticker symbol Dave. Hey, that's actually one of my best performers. We have 4 shares of this company. I did take a little bit of profit on them, but I mean, it was hard not to. We bought this stock like a month ago or like 3 months ago, really, and it's just done insane. So here's ticker symbol Dave. They report earnings this week. So I'm excited to see what happens. They're either going to go up or down a bunch. And check this out. Here's the thing I love about Dave. I mean, this is the kind of stock I want to own. Incredible growth. I mean, look at this. Revenue's up at 50% year over year, or nearly, 46%. Look at this net income. They actually had a little one-time adjustment. So if you go to the operating profit, they're the most profitable they've ever been, ever. And the cash from operations, let me just go to the free cash flow. Yeah, free cash flow is up 161% year over year. Incredible free cash flow numbers, most profitable they've ever been. Look at this EPS, $2 in the most recent quarter. Next quarter, it's expected to be another $2. So the PE ratio is about to collapse on this company. So I can't wait to see what happens. They deserve the stock price appreciation. Don't know if I'd be buying that one down right now. Did you start with paper trades? I did. I also had a little S&P 500 position. All right, let's see here. Think I'm gonna buy Amazon. Yo, Orte, I second you on that one. Amazon seems like one of the perfect stocks to just buy and never sell. Great, just long-term hold. All right, let's see here. Let's see, what platform is this? Oh yeah, hey, sorry, it's a brokerage. Linktree and bio, first link there if you want to get this broker I'm on. AMD stock. Hey, AMD's another one that reports earnings. I can't wait for this one, actually. So here, I'll show you my position in this one as well. Now, I do like being fully transparent. I did trim a little bit of AMD this morning. I sold 1.83 shares at 170 or 172 and 176. Let's see, it's at 177 right now. So, I took a little bit of profits on this one before earnings. I still have a meaningful position. If this company goes up 20% on earnings, I'm not going to sell any. But let me give you my analysis on AMD. I don't know if I'd buy this one into earnings, but I love this company and I'm a shareholder and I'm not going to really sell out of any more shares. So check this out. Obviously, we know they have a huge GPU market share, a 17% PC GPU market share, but AMD is really a data center play. Check this out. Half the revenue comes from data centers. If you're anyone else but AMD or NVIDIA and you want to start a data center, you need a bunch of GPUs. AMD is like, hey, we get into data centers, we can get the GPUs the fastest, the newest models, the quickest, and at the cheapest price, because we're AMD. So them getting into the data center business is genius, and that's why I love them. And also the free cash flow is ridiculous. It's up 91% year over year. Net income, 700 mil. Absolute another monster of a balance sheet right here. So yeah, AMD is one that I own. Might be a little biased though. Hey, what up? We can look at PayPal and XYZ, yeah. Hey, what up, Jordan? Good to see you. So let's see here. Timmy said, what app is this? Hey, this is a brokerage right here. If you want to get this software that I'm on, it's in the link tree in my bio. It's that first link there. It's an affiliate link too. So if you go and deposit some money, we'll both get some free stocks. But anyway, but you don't have to. It's a free app. All the tools are. But anyway, here's XYZ. If anyone's heard of Block before, you probably haven't, because this is the company that actually owns Cash App. They're not called Cash App. They're called Block for some reason. But anyway, Cash App is 67% of the revenue, huge chunk of the business. It's actually showing a little bit of slowing growth. It's actually down 7% year over year. But I believe this company got added into the S&P. I don't remember. I think it did. And yeah, but this is the good news. They're making a lot of net income every quarter. A couple $100 million of net income every single quarter. They had a little one-time adjustment last quarter. It says they made $1.92 billion. They didn't actually, only $250 million. But that's okay. The sales are slowing a little bit, down 3% year over year. I would watch for that to see if the growth come back. But they're deleveraging their balance sheet. This net income is very strong. What about the free cash flow? The free cash flow did fall a bit, but they're probably just investing in the future. I do like them. They're kind of like PayPal. PayPal owns Venmo. So they're two very similar stocks. Ooh, TOST, please. Yeah. So check this out. I own this company, by the way. Here, I'll show you my position, actually. Yeah, there's AMD. Good luck with AMD this week. And also TOST. Toast reports earnings this week. And this is another one I own. This is a restaurant POS point of sales provider. And if you ever go to a restaurant and you see those little iPads that are like, hey, would you like to leave a 20%, 60%, or 1000% tip? Yeah, that machine is probably owned by Toast in that software, and they get a little cut of that. But anyway, they tell businesses, hey, if you just give customers the option to tip, you'll no matter what make more money because someone will. So basically, anyway, let me go back to Toast here and look at their financials. They're the most profitable they've ever been. Revenue's at an all-time high. I mean, look at look at this year-over-year growth rates. It just hits a new record every single quarter. It's 1.34 billion in the most recent quarter, up 25% year-over-year. And look at this. They're now making net income every quarter. If we zoom out to last year, they were losing money every quarter, maybe a tough buyback then, but now they're making net income every quarter, and it's just the profits are going to keep on growing. This balance sheet's incredible as well. Look at this. Their liabilities used to be 41% of the assets. Now it's only 34% while growing the assets. You own more equity in the company. This cash flow growth is nuts, dude. So Toast is one that I own. I don't know if they're kind of at a 52-week high. I don't know if I'd buy them before earnings, just because they've already run up so much. But I do own them, and I can't wait to see what happens. Do you think Amazon is doing better than Apple? I think not today, but I think Amazon might be better performer in the long run than Apple. But Apple's another one that you also probably just want to hold for the long run. I'm not going to say Apple's not a good hold. I think Apple is one of the perfect buy and hold forever stocks as well. You kind of just want to own a lot of the Mag 7. Like, look at the PE. It's a 30 on Apple, so a pretty fair valuation. Historically, that's in line with what Apple always trades at. And look at this right here. Their smartphone market share. With Apple, they have obviously a 19% smartphone market share. They also make their own chips, smartphone chips. They have a 17% share. But look at this right here. This is obvious, but Apple is half the revenue just comes from the iPhone. But then they have this services revenue. So whenever you go spend money in the App Store, if you go spend $100 on Clash of Clans gems, literally $30 out of the $100 goes back to Apple as a royalty. They take so many developer fees is what they call them. So that's where they're making the most of their net income. It's like 99% margin, the services revenue. Then they have the Macs, the wearables like the AirPods and the watches, and then the iPad. And this is also why Apple's a bit affected by tariffs. Like, did you know just only 36% of Apple's revenue comes from the US? For some reason, I always thought it was a little more than that, but 25% EU, then China. So, hey, a lot of China likes iPhones, I guess. Yeah, they're printing money. Actually, Apple has the largest buyback program of any stock. Like, look at this. They're making nearly $20 billion of net income a quarter. And check this out. We go to the cash flow statement. We go to the, this is what's crazy. Apple literally spent $21 billion just this quarter buying back their own stock. $25 billion the quarter before. They're literally spending $100 billion of their profits every year literally buying back their own stock. And when there's less shares that exist, that makes the EPS go up. Actually, I'll show you that right here. Here's how you can prove that the buybacks are meaningful. And I'll be quick about this, but I love buyback companies. So look at this net income. The net income grew 9% year over year. So all right, growth, the net income grew 9, but the earnings per share, which is the net income per share, is up 12%. And it's just the net income per share. And since there's less shares that exist, that's why this went up more than 9%. Anyway, hopefully that was kind of helpful there. Let's keep going here. All right. I saw, Coinbase. Hey, yeah, I think this is not performing as well as Bitcoin, which is unfortunate. They did just report earnings, and the earnings were actually a bit disappointing. Yo, Two Trick, we'll look at Palantir as well. Yes, sir. So yeah, here's Coinbase right here. Not keeping up with Bitcoin, but here's a really cool stat that we get. These are the monthly transacting users. So not just monthly users, but monthly transacting users are 8.7 million, up from 8.2 million. So that was the good news. But the reason they fell, in my opinion, is this huge EBIT miss. They lost 24 million of EBITDA when they were expecting to make 300 mil. They also slightly missed on revenue. So that's one thing you do got to I noticed, like, normally they're making a couple $100 million of operating profits. Something happened this quarter, made it go negative. I think it kind of spooked investors. I don't know. I got to do more research into that. I didn't look into it, but I think that's the reason why the stock fell. But usually that's a Bitcoin proxy. Usually kind of just rhymes with Bitcoin. So let's check out Palantir. I know they report earnings today. I wonder if the earnings are already out. I don't think it is, but later today we get Palantir earnings, and they're at an all-time high. So first off, congrats if you own this one. This valuation is nuts. I mean, yo, Ali Day, thank you so much for the 2 roses there. I didn't even see that. Thanks so much, Ali. And Jace Love too for the rose. I appreciate that. So here's the PS ratio. This is the price to sales. So not price to net income, but the price to revenue is 121. So that's a bit of a ridiculous valuation, but half the revenue comes from the government. A lot of police stations are using the Palantir software, and look, it's up 45% from the previous year. So at this growth rate, what's it going to be this time next year? Incredible growth. And also the commercial revenue, S&P 500 companies, mom and pop ice cream shops, whatever. This business is up 33% year over year. Absolutely incredible. Plus this absolute monster of a balance sheet, no debt, making interest on their cash. Let's see how much cash they have. I think it's like 5 bill. 5.4 billion of cash, up from 3.8 with no debt. So the fundamentals are incredible. I think the valuation is just a little high. I appreciate the breakdown. Never heard this deep dive. Hey, Mahi, I appreciate that, man. Yeah. Y'all want to support me? The only way to support me is subscribe to the YouTube channel. I have a YouTube channel called Nathan Robert. I'm streaming on there as well. I'm trying to build up my YouTube viewers. I sell nothing. I don't sell a course, book, Discord, none of that, man. Just on here, give my opinion. Yo, Ali, thanks so much for the more roses. I really appreciate that. So APP or APLD. So I would actually, I really like AppLovin right now. So if you've heard of this stock before, or maybe you haven't, this is an advertising company, and I believe they deserve this incredible stock price appreciation. So if you're wondering, how does a stock literally go from 50 to 500? Like, what does a company have to do? Well, the company has to do this for it to really be justified. We go to the advertising revenue. You can't make this up. It's 1.2 billion. It hits a new record every quarter. It's up 71% from the previous year, literally to a new record. And this is all high margin. So check this out. That revenue, it's not just revenue growth, but free cash flow growth. They made literally 800 million of free cash flow, up from 400 million. It more than doubled. And same with the net income. The net income went from 230 mil to 500 mil. They're going to be making over $2 billion of net income a year. This is a money printing machine, kind of like Meta. So I'm really intrigued in AppLovin, and they're on my watch list. I do think the valuation is a bit high right now, but they're super growthy. I mean, we can kind of just see the EPS is just expected to keep on growing. The EPS is just net income per share. So AppLovin's very nice. This is Moomoo. Yeah, hey, yeah, it is AD. Again, if you want to get this little software that I'm on, this brokerage, it's in the link tree in my bio, that first link there. It's the affiliate link too, so we'll both it'll help out the channel. Yeah, keep my idle cash in here. Earns the nice little daily interest. Lowest fee broker, no monthly payments or anything. It's free. So anyway, let's keep going here. Josh said wait, what is this one? INVZ and Roku. I want to actually go to Roku. Roku just had a huge partnership with Amazon, actually. So Innovis Technologies, yeah, we don't really cover these kind of stocks, a $300 million company, stocks at all-time lows. But let's see if we'll look at their numbers nonetheless. So they sell LiDAR sensors. And what's the revenue? Let's go see if they have any meaningful sales, because that's what matters. What about net income? So they are losing net income every quarter, but the trend is getting better. They lost 58% less of net income. But if you go to the revenue, actually, this is pretty good. I take it back. The revenue did grow 150% year over year. So as long as they can keep up that huge growth, I mean, there could be some good news here. Pretty good balance sheet as well. Nice little investment they had too. So they're interesting. I don't know. I'd still be careful. $300 million company. Yikes. So Roku, I think this is actually a Kathy Wood stock. Let me see if it's in her portfolio. So Kathy Wood's portfolio, I think she owns a lot of Roku. Yeah, look at that. 5% of her portfolio is in Roku. This is that company that sells you a TV. So they sell you a TV for like no profit. It's like a loss leader. They sell you a TV for a break even, but then they make money on the ads and the software they make off you, which is pretty cool, actually. So we can kind of see, oh yeah, if ARPU, this is average revenue per user, $41, pretty incredible. Active accounts, what was it again? 89 million active accounts, so 90 mil. And that Amazon just had a huge partnership with them, which is really cool. They've seen some really nice growth. Like, look at the platform revenue. Let me go to this on an annual basis, actually. Look at that. I mean, it kind of just hits a new record every quarter. I know this company was struggling because of net income positivity. Yeah, so look at this. For the longest time, especially this year, you couldn't touch this company. They were burning money hand over fist, a couple $100 million every quarter. But now we're kind of seeing the light at the end of the tunnel here. They're now making net income. And was that real? No, but it was definitely trending in the right direction. It's 67% better. So probably by this time next year, they might be making net income. So yeah, that's kind of cool. Yeah, cash from operations has exploded as well. Pretty cool. They're interesting. Kathy Wood owns them. These are all big companies. Give some small ones. Yo, Charlie, here, I'll show you 3 small ones that I do own, and I don't normally cover these kind of stocks, and I don't recommend them just because they're so tiny and risky. But TSSI, DCTH, and GHM, all 3 of these stocks right here all have market caps of $600 million. So very, very small companies. Innodata is a different one. This is a $1.5 billion company, but I still love the growth on that one. Go watch the very beginning of the stream on YouTube. I did a full analysis on Innodata. It's incredible. I love that stock, and I do own them, so I might be biased, but yeah. Anyway, yeah, these are my favorite kind of stocks. Like this is where I put my money where my mouth is. These are the kind of stocks that I own. S&P 500 blue chip stocks. Google, Meta, McDonald's, United Rentals, Constellation Energy, largest nuclear play. I mean, all these great companies. And we're having a pretty good day. What are we? Year to date, we're up 11%. Yo, April was nuts. We were down 15%. I didn't sell a single thing. I literally just bought a little bit of stuff, and now we're doing great year to date. So, yeah, let's see here. Um, let's see. GE Veranova. So GE Veranova, this one should be at all-time highs today. I bet you it's pretty close to it just because the whole nuclear industry is on fire. And I know, interesting said, I have 3K in Apple. I bought in at 212. Hey, that's really good, dude. Nice. So GE Veranova right here. So yeah, pretty much all-time high right now. So yeah, congrats if you own this company. Ever since the GE spinoff, I mean, the companies separately have really been able to focus like on management and margin, and it's been great news. So yeah, you can kind of see this EPS right here. Just expected to kind of hit a new record. So yeah, they're really profitable. It's billion of EBITDA. So anyway, GE Veranova is another nuclear play. Oh, come on here. I actually own a CEG. CEG is my nuclear energy play. This one also is at an all-time high today. So I don't know if I'd buy these two at all-time highs, but they've been some pretty good performers. All right. Is this a stock? You know what? I'll check it out. I'll look it up. ADAP. So this is okay. So a therapeutic stock. Yeah, we don't really cover these kind of companies on this. So look, the market cap is $20 million. So just for jokes, we'll look at it and see why this is a company you wouldn't want to buy. So revenue was $7 million. They had a $120 million quarter. Did they sell something? I don't know what that was. I don't know. They lost 50 million. I mean, the whole companies were 20 mil, and they lost 50 mil this quarter. 75 million last quarter. So I mean, it's tough. I see why it's at all-time lows. There's real bankruptcy risk there, so be super careful. Could be a fun little swing trade, short-term swing trade, but not for me. Yo, Pistons, I actually can't cover that stock because the last time I covered that stock, they took down my stream. Yo, Todd, I hope you're having a great Monday, dude. Good to see you, dude. So let's check out ET right here. This is Energy Transfer. So this is actually an MLP, a master limited partnership. So you do get a K1 tax form, but because they're an MLP, they have this ridiculously high but sustainable dividend. So this has a 7.2% dividend, and it's actually sustainable because this is an MLP. So yeah, you can kind of see where the revenue comes from. It's like these natural gas pipelines, crude oil and transportation, investment in Sunoco LP. Interesting. So oh, look at their midstream revenue. So if we go to right here, midstream revenue, look at that, up 31% year over year to a new record. So anyway, ET is a cool one, but do be careful. You probably already know that. Yeah, hey, Todd, so if you buy that stock, you actually get a K1 tax form, and they're notoriously hard to fill out. My first year investing, I accidentally bought a stock like that, and it costed me $200 with an accountant to get it filled out. It was rough. So I know it was like a pennies on the dollar stock, so it felt even worse. So if you have an accountant, it's no big deal. But that's not a stock. You technically are a partner in the company. You're not buying shares. You're actually buying units, and you're technically a partner. That's why they send you a K1 tax form. So that's one thing you do got to be aware of. Can you do MP? Is that MP Materials? Yeah, this is your rare earth minerals place. So the U.S. government is partnering with MP Materials to open up this one rare earth mineral mine for certain minerals, rare earth minerals that'll supply the U.S. for the next 30 years just from this one mine. We're trying to be more independent from other countries. We don't want this. We don't want Russian uranium and all this stuff. You know, we're trying to be independent, especially because we're poking other countries on a stick with tariffs. So this is your infrastructure play for rare earth minerals. Recommendation to invest now. Hey, you know what? I bought one company today, and I'll share with you what I bought. It's a position I already own, and I actually bought today. This is all today. I bought it in little half share chunks. It's kind of weird, but I bought 0.4 shares, 0.6, and 0.8 shares. So I basically bought 1.8 shares more of Progressive today. I spent just around or let's see, will it show the buy order right here? So yeah, this is what I did this morning. I bought some Progressive at $241 a share. So let me analyze this company for you and why I think this one is a winner in the long run. The S&P is close to all-time highs. This one is a little off its peak. So I thought, hey, why not buy the dip on this one. So first off, this is an insurance company. You've probably heard of them, but look at this. Their personal lines right here has just seen incredible growth. I mean, we look at this in the most recent quarter, it's 19 billion. Look at these year-over-year growth rates. It's at a new record, up 23% year-over-year. That's the kind of growth I like to see. Same with the commercial lines revenue. Let's see how that's doing. Also at a new record. So the business is growing like crazy, and not just the revenue, but the net income. This is the best part right here. Net income went from 1.5 bill to 3.2 billion. That's incredible. And this is since they're making so much money, they decided to do these special dividends. So look, normally every quarter you get 10 cents per share in a dividend, but they decided to reward the shareholder with a huge $4.50 special dividend. They actually do that every year. If we go to last January, it's every January. It was a 75-cent special dividends. Now that the net income has popped off, they paid you $4.50 instantly in a qualified dividend, which is tax-free for me, even in a taxable account. So heck yeah. All right, let's see here. Dollar cost average that you buy every day. Hey, yeah, I love the DCA strategy, but if you're going to continue to DCA in a company, make sure it's a high quality stock because check this out right here. I was dollar cost averaging into this stock right here. So it's a more disciplined approach. Instead of spending all your money at once buying a stock, you slowly buy into it. You slowly dollar cost average into it. But just know that won't always save you because look at this. Always do your own research. This ain't financial advice. Make sure you're buying a high quality company by doing your own research. And be careful to sometimes dollar cost down on a stock. Like I learned some lessons on ChargePoint and some other really bad stocks. All right. Yo, what up, Gabe? You said thoughts on UNH. Yeah, let's look at United Healthcare today. How are they doing? So hopefully green. Yeah, they're up 1%, but still they've had a rough couple months here. Look at this. I mean, after gapping down like 40%, they continue to bleed, and now they're starting to bleed out again. So I do think this one's worth a nibble. I wouldn't I wouldn't go a huge position in this one, but I think it's worth a quarter size position maybe. Look at this. The PE is a 10. So at this really low valuation, uh, you know, the net income could fall another 30% and it'd still be pretty reasonably valued. And the margins did fall, but this was kind of priced in. Like, look, revenue is at a record. This was like just last week. They reported revenue growth of 12%, but a net income decline of 19%. So what does that mean in English? That means the margins are collapsing. I would be careful there, but again, I think the risk reward's pretty decent. 3.5% dividend yield, pretty good. So yeah. Hey, what up, Some? Appreciate that for the follow. Yeah, hey, appreciate that. Yeah, Novo Nordisk is tough as well. Rafael said, "Can I buy for $10?" Yeah, you can. Of course, you can buy fractional shares. Yes, sir. Um, Thoughts on CEG long term? Yo, I think CEG is a $500 stock, especially after the Calpine acquisition goes through. By the way, CEG's my largest holding in here now. This is the largest nuclear energy play. They own 50% of all the U.S. nuclear reactor fleet. So largest pure play for nuclear energy. I don't think this one's a good buy right here. I mean, if you go to the 2-year out multiple, they're trading at 27.5 times. Like a 2-year out multiple, 2027 multiple. Not ridiculous, but I wouldn't be shocked if that one falls. But they are up 4%. I was not expecting them to just monster go up 4.2% today. I mean, incredible. Oh, Charlie said, what? Oh, yeah, what app is this? Yeah, hey, right here. This is a brokerage, a software that I'm on right here. If you want to get this brokerage that I'm on, it's in the link tree in my bio. It's the very first link there. It's an affiliate link too. We'll both get some free stocks, but yeah. Let's see. And I love this app for all the analysis. It's free. All right, NextEra Energy. So this is another huge utility play. Yeah, I don't think it's a good time to buy right now, CEG. But here's NextEra Energy. So this is I think Constellation Energy is going to soon take over them in market cap. But this is the largest utility in the U.S. They own Florida Power and Light. So if you live in Florida, there's a high chance your utility bills are through this company right here, Florida Power and Light. Absolute conglomerate. I mean, it does literally 4.7 billion of revenue just from Florida. Like, this isn't from other, like the whole US. They do 4.7 or 4 billion of revenue every 3 months just from Florida. So huge conglomerate there, and they're making a lot of net income, pretty much close to if you kind of average it out, nearly a billion plus of net income every quarter. You also get a nice dividend, a 3% plus dividend. It's an S&P 500 company. I love the utility sector. Like, if you go to ticker symbol VPU, this is the Vanguard Utilities ETF right here. The Utilities ETF is at an all-time high today, and its largest holding, its market cap weighted, is NextEra Energy. Then you got Constellation Energy. Because this is market cap weighted, Constellation Energy is the second largest utility by market cap, then Southern Company, which I love Southern Company as well. Dude, these are all great. Southern Company is another fantastic utility. And if you don't know which one to pick, hey, maybe just buy VPU, the ETF right there. The VPU, dude, the regulated utility sector, the government force gives them returns. So if you buy this ETF, you should just get like 7 to 8% or more like 6 to 7% of your money back every year, half that from dividends. So anyway, pretty cool. What's that online car auction stock? Was it this? I don't actually know. We were looking at one yesterday. It was called like Car Guru. Let me see if I. Oh yeah, CARG, Car Guru. So this one. I don't know if I'd really buy this one, but this is some things I did like about this stock. If you go to the operating profit, they're pretty much making 30, 40 billion or million a quarter, and it's growing very nicely, up 74%. So they're really growing their margins. Cash flow is really good as well. So that one's interesting. I don't love that sector though. Please do Intel. Yeah, hey, we can look at Intel. I feel bad if you own this one, to be honest with you, but we'll look at them. And here's the sad thing about Intel. Intel is the same stock price that it was back in 1998. So in 1998, this was a $21 stock, and it's $19 now. So you're slightly down on your money if you bought this, a couple decades ago. So it's been a very bad performer, and here's why. They're just losing a boatload of money. They lost their partnership with Apple. I mean, like, look at this. They're burning free cash flow, and not just free cash flow, but also net income. I mean, they lost $3 billion, $1 billion, and I don't know how this is possible, but they lost $17 billion in net income. So I'm being careful with Intel. I mean, look at this compared to what they used to. If we zoom out far enough, look at this. This is where it was a good buy. This company's printed money, a couple billion every quarter. Then they lost their partnership with Apple. Every Apple iPhone used to have an Intel chip. Anyway, I'd be careful. It might be good value right now, but I'm staying away. Like AMD, TSM, Nvidia even are probably gonna do better. But that could be a turnaround play. Bull run is back, yo, for real. Well, my portfolio was up a crazy what were we up on the day? Look at new intraday high, up 2.22%. Pretty nice chart. What about the S&P? Yeah, man, look at that. Congrats if you own any stocks today. Look at that new intraday high right now for the S&P 500. So, hey, go check your portfolio. Must be doing good. Yo, what up, Johnny? Hope you're doing good, man. Happy Monday, by the way. I've got MSTY. Yo, that's like a covered call ETF. Oh, Carvana, CVNA. That's probably the car stock he was talking about. Let's see. CVNA. I just had it. Yeah, Carvana right here. So this company was actually priced for bankruptcy not too long ago. If we zoom out, they literally burned all the bondholders, the shareholders. The stock was $4. It was going bankrupt, and then they got a loan, and now the stock is a $370 million or all-time high $370 stock. How is it at all-time highs? I actually don't believe it. But here's why. The company's actually the most profitable they've ever been. I didn't realize Carvana was this profitable, but I'll go show you this right here. If you go to the net income, I don't know how they did this, but look, maybe it's the tariffs and the used car market, but they're making a couple $100 million every quarter. Their balance sheet's incredible too from what it used to be. Look, they used to have nearly the same amount of liabilities as assets, 98%. Now it's only 77%, growing assets, liabilities going down, great news. So I don't know how Carvana is printing this net income, but good for them, man. Good for them. All-time high today. Let's see. Yo, what up? He said WTRG. So essential utilities. So this one hasn't done too good. Same price that it was back in 2019, but it's a $10 billion company. I'm assuming they're going to have like a 4% yield. Yeah. So a 3.4% dividend yield on this company. Not too bad. The PE is a 17. Regulated natural gas. So they get, wow, look at that return on the natural gas, which is really good. Dune said, what app is this? Hey, this software that I'm on, this broker is actually in the link tree in my bio. It's that very first link there. It's an affiliate link too if you want to get it. Free app, free software. But anyway, but if you deposit $100, we'll both get some free stocks. Lowest fee broker in my opinion. So anyway, the net income's really good actually, 100 mil plus a quarter now. I really like that the regulated natural gas is up 45%. What about regulated water? Yeah, so hey, look at that. So this is a utility play. Nice 3% yield, but it hasn't performed too well like the VPU has. Yo, applesauce, good to see you, man. Hope you're doing good. Yo, Jesse said Adobe stock. Hey, So I'm on an Adobe product every day, like Photoshop, After Effects. I love this company, but the thesis is being hurt by AI. Like I know someone, he just made an incredible logo in ChatGPT. I'm like, if I were to try to make that logo in Photoshop, it'd take me a long time. So the thing is, in 10 years from now, where's this business going to be? It's a bit uncertain. So that's why I think the PE is kind of fallen. The PE is a 21 right now, despite the fundamentals being incredible. And I can't wait to show you something why I think Adobe's actually a buy right now. I think the market's wrong, but they're doing incredible buybacks right now. But yeah, if we look at their digital media revenue, it's up double digits, up 11% year over year. Actually, if we go down here to the FCF, which is free cash flow, they're making over 2 billion plus of free cash flow a quarter. The net income's just as good, like 1.8, 1.7 billion in net income a quarter. So what is Adobe doing with all this money since they don't pay a dividend? Well, they're returning heck of money to the shareholder via buybacks. Look at this. They spent 3.5 billion just in the most recent quarter buying back their own stock. Or 3 billion, 3 billion. And look what these buybacks do. So the net income, this is, I love pointing this out. Look, the net income's up 7% year over year. So the net income grew by 7, but your return as the shareholder, the EPS, which is net income per share, went up by 12.8%. So that's the power of the buybacks that they're doing. It made your earnings per share go up by 12, even though the net income was only up by 7. So that's kind of cool thing I like to point out there. I love buyback friendly companies. You know, less shares that exist gives you more ownership in the company. Powell earnings today, is it today? I don't think Powell Industries is today. If it is, that's a great Monday then. I think it's on the 5th, but I guess we'll find out here. Let's pull it up. Yo, what up, Joshua? Hope you're having a good Monday, man. Yo, Bobby, what's up, dude? So August 5th. Yeah, wait, is today August 5th? Yeah, so tomorrow they report earnings. So that'll be really fun. I love Powell Industries. This is a lot of the revenue comes from the oil and gas industry, but this has been a huge margin growth story. Like, look at this. Revenue's up 9% year over year, but the net income, you ready for this, is up 38%. So they've really been growing their net margins. I mean, incredible double-digit margins now. This net margin growth, like, look, it was a tough business back here, single-digit margins. Now it's 16% at a record. Also, they have a dividend. The dividend is nothing. It's an 8% payout ratio, and it's a 0.5% yield. So you get half. That's a higher yield than Apple, actually. You get a higher yield than Apple, half the payout ratio, and the PE is a 15, so pretty fair PE. And check this out. So they made $46 billion just this quarter in net income. Let me show you how much the dividend costs. This is what I love about them. I think it's cost like $4 million, but we'll see. Yeah, dude, no way. The dividend cost $3 million. Dude, they could literally afford right now to like 4x their dividend. They just choose not to. That's what I love about Powell Industries. And they also just acquired a company. If I go to the news here, they acquired a company. Yeah, right here. It's hard to see, but acquire Remstack. This was July 15th, not that long ago, but they have no debt as well. Powell's a debt-free company, $380 million of cash. They just acquired a company. I love them. So can't wait to see what happens with them. All right, someone said HIMS. Can you do RX and RX? Yeah, what up, Bobby? So I'll go over RX. That's in the NVIDIA portfolio. I actually don't recommend this company, and I'll show you what. From a financial point of view, NVIDIA owns the stock, but just because NVIDIA owns them doesn't make the stock a buy. And here's why I would stay away from this one, in my opinion. So just kind of know the whole company is worth $2.5 billion. So you could buy in at a $2.5 billion valuation, or you're buying a company that lost $200 million just this quarter. In nearly $200 million the quarter before, $100 million. So they've lost over like 25% of the entire market cap in the past year of net income, all for a company that did $15 million in revenue. So in my opinion, RXRX, I think they're like some gene splitting company, but it's hard to pay that valuation. It's too risky. There might be some bankruptcy risk there. Maybe NVIDIA will save them, but I don't know. Oh, here's a cool one. said HIMS stock. So yeah, this is HIMS. Oh, I got my tea right here. I forgot. So hims and hers right here. One sec. Oh, that's good. Okay. So hims and hers, this is a company that a lot of people think this is just a meme stock, but this company is no meme because they have real good growing fundamentals, and they're on my watch list to potentially buy. I'd like to see them go lower because they are pretty close to an all-time high if we kind of zoom out there. But check this out. Here's why I think they deserve the hype around them. It's just the growth. I mean, what other companies pulling this off? The revenue grew 110% from the previous year. Absolutely incredible growth. And not just revenue growth, but profits. Like if we go to the FCF free cash flow, 50 mil every single quarter, incredible year-over-year growth rate numbers. Same with net income. 50 mil of net income this quarter. They're going to be making over 200 mil of net income a year, all for a company that has no debt. Amelia said, what app is this? Hey, I'm actually on a brokerage right now. So if you want to get this software that I'm on, it's in the link tree in my bio. It's that very first link there. It's an affiliate link too, but it's free. It doesn't cost anything. But if you do deposit $100, we'll both get some free stocks. So it helped me out. But anyway, let's see here. FICO next. Yeah. Hey, Jason, has anyone heard of like the FICO score? So whenever you go make a big ticket purchase, like you buy a house, you buy a car, you're paying like a couple dollars for the FICO score. And they've had immense pricing power because they've been able to raise the price. Like you don't care if it went from $3 to $6. If you're buying a house, it doesn't even matter anyway. So this is the score business is, 60% of the revenue has had immense pricing power, and it's really high margin for them as well. The story of how they got it implemented in all the banks and stuff is genius. But anyway, look at the net income too. They're making like 200 mil a quarter. It grew 43% year over year, really strong growth. But if you're wondering like, hey, everything looks good, but why is the stock crashing? The government is actually making a new scoring system to compete with FICO. FICO used to have a shared oligopoly with like one other company for the score business, but now there's going to be a third competitor. I don't think it should be this devastating for the stock, but I guess that might hinder future growth there. So maybe that's something you got to be careful with. HIM's biggest bubble, the PE is a 96. Yeah, hey, but the net income growth rate, you really want to look at the forward PE, like 2 years out. They're probably at like a 30 PE or something more reasonable because they're so growthy. So is Hood still a buy? Hey, let me pull up Hood stock. They've actually been my best performing stock of all time. And I regret every share I've ever sold of Robinhood. Yo, let's see. What up, Mac? What's up, man? So we are actually up 663% on Robinhood. Wow, they're up 6% on the day. Dude, everything's up on the day. Look at this. That's a whole page of green. Geez, Reddit's up another 6. I didn't even look at this portfolio today. So, dude, what bad jobs data. So anyway, Robinhood, this company deserves to be at $100 a share. It's tough buying over 100, and I'm not buying over $100 a share, but they deserve to be at where they're at now because of the innovation and growth here. I mean, check this out. I mean, this is what I love about them. The revenue grew 45% year over year. So they did nearly a billion of revenue, and 380 million of that was net income. Robinhood has ridiculous margins. Look at this margin, 40%. It was a little one-time adjustment here, but 40% net margins, absolutely incredible. So people are really starting to take Robinhood serious because they're making a couple hundred million every single quarter when, they used to lose a couple hundred million every quarter. So someone said that's a fantasy portfolio, not real. Wait, yo, Rocket. He said, "What app is this?" Hey, yeah, sorry again. If you want to get this software that I'm on right here, this app, it's actually a broker. It's in the link tree in my bio. It's the very first link there. Yeah, dude, crypto fees is what's making Robinhood a lot of money right now. If we go to Robinhood, I have my assets with there. I have my Roth IRA with Robinhood, my main taxable account, and they make money off margin, payment for order flow, and they have like this. You can like. I can't say this word exactly, but you can like they make money every time you're kind of doing this kind of stuff. So, anywho, let's keep going here. Marvel Technologies. Oh, FLS. I forgot. Sorry, I didn't see that one. Let me look at Flow Swerve right here, and then remind me to look at MRVL and Tesla, NUVB. I want to get to all these stocks here. So here's Flow Swerve. So $7 billion company. 24 PE, so the PE seemed pretty fair. Let me pull this up, the financials here. What's my phone on? My phone's on 9%. Let me go get the portable charger, but the PE looks pretty fair on this company, a 24 PE. So FlowSwerve Pumps Division, so they sell pumps or something. So the revenue, this might be the only concerning part. It's not growing too much. It's only up 1.7% year over year. So nothing blowing me away here. But this business right here, the flow control division, is up 13% year over year. So that's actually a lot better growth. So, and actually the net income's very good down here. So check this out. They're actually making like nearly 80 million of net income a quarter. So the revenue grew 2, but the net income grew by 15. So they are actually growing their margins as well. Pretty good. So, it's like a mixed bag here. I would like to see more sales growth, but nice. Low P. That's probably why the PE is a 24. Is there any construction stocks? Hey, my favorite construction stock or one that benefits from construction is actually United Rentals. But Caterpillar is like 40% of the revenue comes from construction. I'll kind of show you that here. They are at all-time highs though, so dang. I didn't actually know that. Caterpillar is doing great. So look at this. The PE is a 21. So first off, even though the stock's at an all-time high, this PE implies that it could go higher. I have like a feeling like this company could stretch up to a 22, maybe a 23 PE before it really gets overvalued, or maybe even 25. So I do think there's upside in this stock, even though they're at all-time highs. And look at this. Construction, 36% of the revenue. Pretty cool. And if you go to the net income, look at that. They're making $2 billion plus of net income a quarter. The dividends, a 1.25% yield. 25% payout ratio. So Caterpillar is pretty cool. What's going on with Amazon? Let me see. I do own some Amazon. They reported earnings yesterday. Yeah, you can kind of see that gap down there. Yeah, I'm actually looking to buy some more Amazon, especially if they go down a little more. Let's see. Datadog. Oh, hey, Datadog. That company just got added into the S&P 500 actually. So and they've kind of sold off all the gains. Wow. So this huge candlestick gap up was from the S&P 500 inclusion, and now they've kind of sold it off here. So I do wonder what happened. But this is a nice little growth company. Like look at the revenue. I mean, 760 mil. It hits a new record every quarter. I mean, it just grows 20% plus every year, and they're making net income. The net income did fall a little bit year over year, but still. Cash flow growth is insane. Yeah, up 28%. So Datadog's cool. With that S&P 500 inclusion. Hey, I already looked at Coinbase, so I'll be really quick about this one. Coinbase has not been keeping up with Bitcoin. They had a huge kind of miss on earnings on one part that I would be careful with. So there's one metric that I do really like about Coinbase, and I love that we get this right here. So look at this right here, the active users. Coinbase actually has 8.7 monthly transacting users. Pretty cool stat, up from 8.2 million, but the reason the stock fell is because of the miss on EBITDA and operating profit. So look, they were expecting 370 million. They lost actually 24 mil. And also if we go to the operating profit here, they used to make a couple hundred mil every quarter. It actually went negative. So I think that's why the stock fell. So that's what I got to look into. I haven't done too much more research beyond that right there. What's this one? Forterra stock, FORT. Have you ever heard of SPXC? I own it, I think is kind of like, I'll check it out after this. So are you talking about Forterra? I don't see Forterra on the name of any of this. Let me know if you're talking about Fort Technology. Can't find that one actually. So let's see, SPXC. What's this stock right here? So SPX Technology. So wow, look at that. Yeah, this stock's at an all-time high. Nice. Let's go. $9.1 billion company. So let's see. Yeah, heating, ventilation, and cooling. That's what HVAC stands for. We can kind of see that annual revenue growth here. Very nice trend on the HVAC. What about this one? Detection and measurement portable segment. Look at that. It's also at a new all-time high. It only grew 0.05% year over year. But still, let's see the net income over here. Yeah, look at that. They're making 200 mil of net income a year. They're growing their margins as well. Nice 10% net margin. That's the same margin that Comfort System has. So nice. This is another HVAC play. They pay a dividend, no dividend on this company. Actually, I kind of like that they don't pay a dividend, and they're at all-time highs. So, geez, yeah, congrats if you own that one. Oh, yo, what up? Tom said NET. This is a huge cybersecurity play, and it's actually, where is that portable charger? Oh, my phone's getting low here. All right, so Cloudflare. This is a huge company. Literally, and this is a huge number. 20% of all global internet traffic goes through Cloudflare in one way or another. So they're a huge Internet of Things, huge cybersecurity stock, and the stock's at an all-time high. So yeah, congrats if you own this one. They're just super growthy. So if we go to the revenue right here, it's 500 mil the most recent quarter. I mean, it just hits a new record every quarter. I mean, if we keep on zooming out here, it's 300 to look at these year-over-year growth rate numbers. It does not stop. The growth just does not stop on this company. So super growthy company. I would be careful though with the net income because they are not net income positive. They're not making any profits. But the balance sheet just like jumped up right there. Did they buy a company or something? They did. They invested 800 mil. I need to look into that. I do wonder what Cloudflare did or who they acquired really. I haven't looked into that. So, all right, got the portable charger here. Only see bubbles. All right, let's see. Oh, Arista Network. Oh, and I really like that one actually. Let's pull it up. ANET. So let's see here. Arista Networks. They're on my watch list. I think this company deserves to be doing this good. So check this out. The stock is close to an all-time high. Let's see what they're selling. So they sell products, and look at that. That's really good growth. It's up 30% year over year nearly. And the services revenue is also up 30% year over year. So both businesses are growing very strongly. And look at this net income that they're making. 40% net margins, by the way. 40% net margin. The net income is 800 million. The margins grew as well. So, I mean, just such a nice growthy company. I mean, they're printing money at this point. What about free cash flow? FCF. Yeah, look at that. Free cash flow is just as good, also growing. So, actually, Arista Network seems very interesting. PE is a 50, though, but they're growthy. Might be a little too high, but AMDL is just an ETF. So actually, if I pull up AMDL, this is just a 2x long AMD ETF. So AMD reports earnings this week. So I think in 2 days, this company reports earnings. So I guess if you didn't want to buy a call option and just wanted to get some exposure and risky, you could buy AMDL. My side of the bet is I just own AMD shares. Let me pull this up real quick. AMD is, I think, it's my largest holding here. Yeah, look at that. We got 11 shares of AMD. It's up 3% on the day. Pretty good. We didn't even time the bottom on this stock right here. If we kind of zoom out right here, you know, the bottom was 76. We got in at 125. So they've just still been a monster performer. All right, let's see. Let's see. Urgent Pharma. What do I do as a day trader? Yo, what up, Christy? I'm not too sure there. I would just buy the S&P 500 or, buy some stocks you know and love. But Amazon's at a good valuation right now. Buy Google, Amazon, Meta, stocks you use and like. All right, so, Salesforce. Hey, so CRM, this is the main software CRM play. So I like their ticker symbol as CRM. But yeah, check this out. The stock has actually been struggling for a while, and that's because the growth has slowed, but they're still extremely profitable. But I think investors aren't too happy with the slowing growth, and I'll share with you that right now. They're also doing a bunch of buybacks and dividends right now, but check this out. Here's what I love about them. They're so diversified. Like, look at all these different revenue streams here, services, sales, platform. They own Slack. If anyone's heard of Slack before, Amazon uses it. So many businesses use it. Marketing and commerce. And here's kind of the thing that was slightly disappointing. The free cash flow only grew by 3.5%. Still an absolute monster number, 6 billion, but it only grew by 3%. And the net income, after-tax net income only grew 0.5. So I think investors wanted a little more growth than that, but I still think they're going to be a winner in the long run. What happens is, hey, Degil, this is actually a broker. So if you want to get the software that I'm using right now, it's in the link tree in my bio. It's that very first link there. It's actually an affiliate link too. So help out the channel. It's free though. But if you deposit $100, we'll both get some free stocks. Yeah, I like to keep my idle cash in here. It earns the nice little interest. It's the lowest fee broker in my opinion. So let's see. Tesla. Here's a cool one. Actually, J&J. I haven't looked at this stock in like probably months. So Johnson & Johnson, I actually want to check up on them. This is one of like your safest stocks out there. You buy Johnson & Johnson and you kind of just forget about it because they'll slowly return you a bit every year. You get 3% of your money back in dividends. They are in a pending litigation lawsuit, but yeah, 3% dividend right there. The PE is an 18, so pretty fair PE. Let's see. So look at this huge beat on revenue. So they beat on revenue, they beat on EPS, and they beat on EBITDA. So they had a triple beat quarter, which was pretty good. So yeah, they make around $5 billion of net income a quarter. And what is Johnson & Johnson doing with $5 billion of net income a quarter? Well, check this out. If we go over here to the cash flow statement. Okay, TikTok said I'm AFK. All right, sorry, there we go. We're back. TikTok made me prove I'm not AFK. Okay. But this is the best part right here. Where's the dividend cost? I know they pay a dividend. Yeah, so look at this. The dividend cost right here, 3.1. Oops, hold on. There we go. Basically $3 billion of net income a quarter. So they can't afford the dividend. The payout ratio is not 80. It's a little lower than 80%, but the dividend only costs $3 billion a quarter. And now they're also returning money through buybacks. They didn't buy back any stock in the most recent quarter, but last quarter they spent $2 billion. They usually spend a couple $100 million every quarter buying back their own stock. So shareholder-friendly company there. And they just acquired Shockwave. Actually, let me see if I can still find their ticker symbol. SHOV. Let me see if I can type it in. Shockwave. No, maybe I can find it over here. Johnson & Johnson got a steal of a deal on this company. But maybe it's delisted now. Oh, it's right here. SWAV. Johnson and Johnson acquired this company for only $12.5 billion, and it's so growthy. I mean, this is a anyway. I used to actually own Shockwave, and then it got bought out by Johnson Johnson. That's why I know that. Had some nice little profits there a long, long, long time ago. But anyway, let's keep going here. Um, all right, him's definitely dropping that PE level is insane on. Yo, what up, Nick? I wonder what him's earnings will be. The PE, the forward PE is what you want to look at for that company. There's the net income growth has been just ridiculous. So, yo, what up? Here's Johnny. Would you buy Duolingo at current prices? Let's check it out. DUOL. This is actually a debt-free company, so no debt on this company. If anyone's heard of Duolingo before, it's like that language learning application. And I love the growth here, and I probably would buy the stock right now at this valuation. Not a huge position, but maybe, a quarter-sized position or something. But look at these year-over-year growth rates. For literally years, as far back as it goes, in 2021, it just grows 50% every year. So from 40 to 80 to 100 to 190 mil now. Just incredible growth on the subscription revenue. You can just see it hits a new record every quarter, every year. And not just the subscription revenue, but also the advertising revenue, because you have to pay a subscription to not see the ads, but then they also make money from the ads that you do see, So I don't know, man. Oops, I just realized my phone disconnected. That's not good. Wait, did the application? Okay, there we go. Sorry. There we go. We are back. Sorry. Yeah, here's the advertising revenue. The advertising revenue grew 38% year over year as well. So both segments of revenue have shown some very strong growth. And not just, the revenue, but the profits. The FCF, free cash flow was $100 million. Net income was $35 million, up 30% year over year after growing 1,000%. I mean, just incredible growth here. So I would actually nibble on Duolingo right here. Yo, what up, Matthew? What's up, man? And what up, Howard? You're having a good day. A good happy Monday. So Johnson & Johnson needs to buy Moderna. Hey, that'd be interesting, but they're too big to probably do that. Hey, try not to spam there. Let's see, CRDO stock. Let's check it out. Credo Technology. So hey, this stock actually is on my watch list. So I do like this company. Look at that. They're at an all-time high right now. So congrats if you own this stock. Let's go analyze them. Let me see why I like them. So first off, they're probably really growthy. So yeah, look at this. The revenue went from 60 mil to 170 million. I mean, that is what kind of justifies this crazy stock price appreciation. They deserve it. They're super growthy. So the revenue is up 180% from the previous year, which is incredible. And we can also see on that, they made 36 mil of net income, 30 mil last quarter as well. Fortress of a balance sheet, dude. Wow. So anyway, I can see why CRDO is doing so good. But they probably deserve to be at all-time highs. Alibaba. So let's check this one out. So, oh yeah, hey, we'll look at Bobby. We'll look at NVTS. I got you. We'll check it out again. So Alibaba right here. This is like the Chinese Amazon. So if you've heard of AliExpress before, like an e-commerce play, this is the stock that owns that, and they're actually really profitable. Even though they're Chinese. So yeah, actually, look, Chinese company. So we have to convert the revenue to US dollars. So this is their net income in USD. It's actually really profitable. Check it out. They're making like if you kind of average it out here, they're making like $4 billion of net income a quarter. Pretty good. They just started paying a dividend as well. If we go over here, 0.85% dividend, low payout ratio. So hey, that's they're starting to be shareholder friendly company. They're interesting. They are Chinese though. So let's look at NVTS. This is Nvidia Semiconductor. This stock was saved by Nvidia because before this huge gap up right here, they were literally $1.50 stock and they were at all-time lows. So here's why the stock was at all-time lows before today. If we go to the revenue right here, I mean, down 39% from the previous year, not what you want to see. And they're also losing a lot of net income every quarter. So I can see why they were at all-time lows before today, but that huge NVIDIA partnership just really saved the company. So that NVIDIA partnership was great news for them. Great news. Casey said, IDCC, I don't care. Oh, wait, hey, this one's also on my watch list. So this stock is at all-time highs right now. And geez, they just gapped up as well. So congrats if you own this one, dude. Geez, the earnings were incredible. Let's go look at what these earnings were. Let's see. So, dude, just an absolute monster beat. They were expecting 200 mil of revenue. And they reported 300 mil. Look at that EPS beat. They beat by 100% on every metric. So I can see why they're at all-time highs, man. They made 180 mil of net income. Revenue grew 34%. So they're growing their margins, dude. 60% net margin, up 22%. Man, I regret not buying this one. They deleveraged their balance sheet. So look, the liabilities used to be 57% of the assets. Now it's only 45. This is the formula for a monster returning stock. I mean, I can see why they're at all-time highs. Those are really good financials. Wow. So let's see. Can we look at Bros? Yeah, hey, Dutch Bros stock. Let's check it out here. So this is kind of like a Starbucks competitor, and Starbucks has been struggling. Thoughts on MicroStrategy and their net income? Yeah, we can look at MicroStrategy. So here's Dutch Bros. Starbucks competitor. Here's what you really want to look at. So most of the revenue comes from their company operated shops. So only 8% is franchise, but their company operated shops have seen some very strong growth. For a restaurant in this environment, this is really strong, up 31% year over year. I think the stock price is just kind of just caught up in the Starbucks and these other restaurant shenanigans that are tanking. Like Chipotle as well fell a bunch, but the net income is really profitable, the most profitable they've ever been, making like 20 mil a quarter. I think Shake Shack really struggled. Hold on, let me pull up. Anyone know Shake Shack? They're actually publicly traded, SHAK. Yeah, look at them as well. Yikes, little gap down. It's been on my list. I didn't grab it. Yeah, me too, Casey. Unfortunate, but it's all right. Lines out the parking lot in Phoenix. Oh, for Dutch Bros. I've only been to Dutch Bros once in my life, and it was when I went to Arizona. So that's really cool. Oh, so someone said thoughts on MSTR and their net income. So for MicroStrategy, you don't really look at the net income. Oh, wow, look at this. On August 4th, let's see. We'll just read the article here. MicroStrategy on August 4th buys 21,000 Bitcoin for $117K each. So this company just acquires Bitcoin, and that's what the market cap is here for. The market cap is just really the price of most of their Bitcoin. And you really don't look at net income, because if this wasn't real, this was some one time, that was the Bitcoin shenanigans from issuing shares. What you really want to look at is just the balance sheet for this company. And how did the assets go from 7 billion to 64 billion in 1 year? All these assets are just the Bitcoin that they own. They literally diluted you by $30 billion, bought a bunch of Bitcoin with it, and now the Bitcoin has just appreciated a bunch. Also, they just bought more Bitcoin on August 4th for $117K each. What is Bitcoin at? Let me see real quick. Bitcoin, 115K right now. So interesting. What are we at? Ooh, we're up 2.25% on the day in there. Not too shabby. All right, let's get back to the stock analysis. Hey, what up? Lori said, OKTA. So, hey, let's check out Okta. This is like a software. I've used their software before, or like something powered by Okta. I've seen it so let's see how they are doing. So revenue did show some slowing growth, but it's still growing double digits. Revenue is up 11% year over year, and they made net income on that. So this is great news. If you kind of zoom out to last year, this was a tough buy. They were losing 200 million a quarter. No one could really buy the stock, but now they're the most profitable they've ever been. Made 62 million. What about free cash flow? FCF. Yeah, look at that. The free cash flow is like 200 mil a quarter. But again, this stock reminds me of DocuSign. The fundamentals are at their all-time high best, but the stock has just been so heavily suppressed since 2021. Kind of like PayPal, XYZ. These as well. They're just down bad since 2021. So yeah. Costco. What up, Dean or Dion? What's up, man? So Costco stock. This is a great company to buy and hold for the long run. Although the valuation's a little high, I love Costco. So to get even into a Costco, you need a subscription. So Costco makes every month a high margin, subscription revenue stream, but also consumers love going in there because you're buying stuff in bulk. Consumers get a good deal on stuff. So everyone's happy. They have the $1.50 hot dogs. They have the lost leader rotisserie chicken and stuff, and it brings customers in. And look at this, like the most well-run like grocery store. Like they're making nearly $2 billion in net income a quarter. And they have, where's the dividend? Oops, dude, what I just clicked. They have like a 0.5% yield as well. They sometimes do special dividends as well. So yeah, look at this. They pay they raise it every year. It just went from $1.16 to $1.30. So they did a nice little dividend raise. But yeah, look at this. They made so much money that they sometimes do special dividends. They returned $15 instantly to the shareholder in a special dividend. Anyway, Costco's really cool. Can you please do Joby? Yeah, hey, we can do Joby. Sorry if I don't get to all the stocks here. This isn't one I like. I think, let's see here. They jumped 15%. Let's see the news here. Joby agreed to acquire Blade Air Mobility for $125 million. That's really good, actually, because I believe this is a startup right here. So you go to revenue. This is why I don't really talk about this one or Archery Aviation. They're all revenue-less startups. Like, look, Joby Aviation did $55,000 in the most recent quarter and is losing a couple hundred million of net income every quarter. So in my opinion, this is a tough buy. But if we go to the largest shareholder here, this is kind of the good news. Toyota Motor is the largest shareholder, so it's kind of backed by Toyota. But this is a revenue-less company, and what's the market cap? A $17 billion company with a no revenue, losing 200 mil a quarter. It's a tough buy. Hey, yeah, here. Oh, sorry, user, I gotta mute you here. What platform is this? Yeah, hey, this is actually a broker that I'm on. If you want to get this software that I'm on, it's in the link tree in my bio. It's the very first link there. The free app. It's also an affiliate link too, so it would help me out. Flight Center. Hey, Sono, what's the ticker symbol for Flight Center? We can check that one out. I used to work at Shake Shack as a head manager. Terrible job. Oh, dang. You mentioned you make Duolingo a quarter size position. So, like, if you wanted to, like, if you normally put $100 in a normal position, and maybe only put $25, like a quarter size position, like a small position in that company, I wouldn't put a lot of money into it, is basically what that means. You have to wear steel toe boots and be ready to fight out, to get ready to fight for the rotisserie chicken at Costco. I see one guy on TikTok. Y'all seen the guy on TikTok? I think he had like the Costco rotisserie chicken like QR barcode like tattooed onto him. But let's help out this guy. Let's look at NVO stock. Someone's asking about Novo Nordisk. This is the company that owns Ozempic. So if you've ever heard of that like weight loss prescription, it's actually owned by Ozempic. They also own Wegovy. So if we go to the where the revenue comes from, 95% of this company is their obesity care products. So this is a weight loss play, pure play. And here's the net income they're making. They had a good quarter, but terrible guidance. They had bad guidance for the future. But for right now, the business is doing incredible. $4.2 billion in net income this quarter, 3.3% dividend yield. Everything is looking great on NVO. The PE is a 13, the lowest PE they've ever been at. But they lose their patents for Ozempic in 2027, so their patent expires, which is tough. All right, let's see. Oh, NVIDIA stock. Yeah, and hey, we already looked at RXRX. Yo, Bobby, RXRX is not a good buy in my opinion. I wouldn't buy that one. And so let's check this out right here. So this is NVIDIA right here. So NVIDIA is at an all-time high right now. So they're a huge company, a $4.4 trillion company, which is just incredible. So this stock is at an all-time high pretty much today. There's a huge earnings tailwind because NVIDIA can now send their chips to China. And they used to be restricted. They used to not be able to, but now they can finally send them again, and that's going to be a huge earnings tailwind for NVIDIA. And check this out right here. They have a huge, obviously, we know, PC GPU market share, a 20% PC GPU market share, but they also have this automotive revenue. If anyone heard of that Lucid Uber deal where Lucid is making $1.2 billion worth of cars for Uber, or Uber's buying them for $1.25 billion, that the cars, the autonomous driving software is actually NVIDIA software. So they have this automotive business, which is pretty cool, which is the software, AI driving software, but most of the revenue just comes from data centers because NVIDIA makes their own chips, and to have a data center, you need a bunch of chips, and NVIDIA can just make it themselves, get the newest chips at the lowest price possible. That's also kind of the cool part about AMD. And look at this net income. They're making like 20 bill of net income a quarter, and it continues to grow. I'm not sure what you said, but it's an Australian company. I said, yeah, what's the ticker symbol for that stock? But you know what? I got you. We'll type it in for you. Flight Century. I might not be able to find it, man. Yeah, Flight Century. I typed it in exactly. I can't find that company, man. Let me know the ticker symbol and maybe I can find that stock. But they are on the Australian Stock Exchange, so I might not be able to find it. What's your thoughts on ULTY? What is ULTY? Is that a covered call ETF? I guess we'll go find out. Do they sell like covered calls on Ulta Beauty? Or no, this is the Title Trust Yield Max Ultra Option Income Strategy. So, you basically buy these to maximize your dividend income. Like you can kind of see the stock. It literally went from 19 and now it's at 6. So, and that's just from 2024. So they've lost well over 50% of its value in a year. So you don't really want to expect to outperform the market in this one. So yeah, look, the dividend yield is 126% because the price is going so low. Then they have to cut the dividend. So the dividend got cut more than in half. So not something, to be honest with you, really want to buy and hold for the long run. You just won't outperform the S&P 500, but you buy it if you want a bunch of dividends. So let's see. Yeah, no problem, Memphis Mike. I used to live in Memphis, a Germantown. Why did OTIS gap down? OTIS, let's see. Otis Worldwide. So yeah, check that out. They gapped down on earnings. So that little blue dot, you can kind of see right here, blue dot, that means earnings. So they reported earnings and they must not have been good. Let's go see if we can find out why. So yeah, look at this. At first glance, analysts were expecting 3.7 billion of revenue. They only made 3.59. They beat on net income though. They missed on EBIT. So it's kind of a mixed bag there. Oh, and they have a lot of liabilities, so it's rough. I mean, they have more liabilities than they have assets. Net income, they are still net income positive though, so this is the good news. They are making net income every quarter, but the slowing growth is probably why the stock has fallen. I mean, the sales, the lifeblood of the company is down year over year, so we want to see kind of the growth come back to them. But yeah, it might be a good buy. They are making net income every quarter. Let's see. Can you check out URGN? What's this company? And then I actually want to go see how the market's doing. The market's surprisingly green today. So, congrats if you own any stocks. Yeah, this company's been struggling for a while, but they had a nice little recovery the past couple weeks here. Let's see if we can figure out why. So, Gelmito. I don't know what that is. Maybe it's like a prescription. I don't know. They missed on every financial metric. The balance sheet's not great. They're losing a lot of money. So look at this. They're losing 30, 40 million of net income a quarter, and the whole company's worth 900 mil. So they're losing they lose 40 mil. That's over 4% of the whole company they lose just instantly. So I'd be careful with that one, to be honest with you. Let's see. Indian stocks. I don't know. I don't know any Indian stocks really, unfortunately. I don't know if I can even buy on that exchange, but I know maybe it's like a India ETF I could find. Oh well. Let's see here. Oscar or HIMSS? You know what? Let's look at Oscar. We have not looked at Oscar Health today. This is the Medicare Medicaid company that's really taken market share. But as we know, the government regulation is not in favor of the Medicare Medicaid providers right now. So that's kind of why the stock's been struggling. But this is what I love right here about this company and why I think this one might be worth a nibble. Like, look, the revenue was $3 billion in the most recent quarter, up 42% year over year. If you go out on it, $3 billion just this quarter. If you go on an annual basis, for the full year 2020, it was 500 mil. And, the next year, 2021, for the full year, it was 1.92, and then 4. So the growth is just incredible in Oscar Health. They're taking market share, and they're just now starting to get net income positive. So look, net income's up 55%. Anarchy said, what app is bro using? Hey, I'm actually, if you want to get the software I'm on, it's actually a broker. It's in the link tree in my bio. It's that very first link there. It's a free app. It's also an affiliate link too. So if you end up depositing $100, we'll both get some free stocks. But yeah, it's my favorite app for doing analysis. And I keep my idle cash in here too. You get some daily interest on it. So anyway, let's keep going here. Symbiotic stock. Hey, that's one of my favorite robotics stocks of all time. So if you're looking for a robotics play, this is Symbiotic. This is a warehouse robotics company that their main partnership is with Walmart. Actually, if I go to the shareholders down here, I think Walmart, yeah, look at this. They had such a good partnership with Walmart that Walmart decided to buy 13.75% of the company. So Symbiotic, a lot of it's owned by Walmart, but out of all the robotic stocks I see out there, like Rich Tech Robotics and some of these other trash ones, they have no patents, no revenue, but this one has real IP and real revenues and real growth. I mean, after the revenue grew 47% from the previous year, it grew another 40%. So incredible revenue growth, and they're starting to get net income positive. Not fully yet though, but the trend's getting better. They lost 60% less net income than the previous year. Then keep that trend up, that'd be amazing. So yeah, free cash flow exploded, 250 mil. So Symbiotic is a really cool pure robotics play, AI warehouse robotics play. And another robotics play I like even more is actually Amazon. But again, Amazon's not a pure play for robotics. Hey Matthew, you live near Memphis? Nice, dude. See Nifty. Knock. What's up? What is Nifty? Is that a ticker symbol? All right, Francisco, what's up, man? He said, I was talking about CPRT from earlier. Can we talk about it? Oh, let's check it out. Yeah. So let's see here. A huge company, actually. Wow. $44 billion company. So that's a really big market cap. But the stock has kind of been struggling. I mean, look at them the past couple of days here. I mean, stock's kind of been struggling. Let's see if we can find out why. So they missed on revenue a bit. They slightly beat on net income, but missed on EBITDA as well. So another mixed bag. They're still really profitable, so absolutely no bankruptcy risk here. But yeah, whoa, really good balance sheet. No debt on this company, and they have $4.38 billion of cash. So 4.4 billion in cash, making 400 mil of net income a quarter. And the whole company's worth 44 bill. That actually seems pretty reasonable to maybe look into this one to buy the dip on. That's really interesting, actually. The growth did slow a little bit, but yeah. What about Lululemon and On? Hey, Lululemon, let's check them out. So I actually trust Lululemon a little bit more than Nike right now. Nifty is the Indian markets. Oh, is that like an ETF? Oh, okay. So here's Lululemon. So after reporting earnings, this was kind of rough. They gapped down on earnings and then bled out for another 10 days and are slowly bleeding out again. So yikes if you own Lululemon, but let's go see if this one's potentially a buy the dip on, because the margins fell, but I don't think it justifies this much of a stock price decline. So I'll go ahead and show you this. The PE is a 13. That's the cheapest PE it's like ever been at. We can kind of compare that to the industry average, I think, or not, because my Wi-Fi is terrible. Okay, the industry average is a 22. So they're trading at like way below industry average right now. So anyway, 13 PE. I think that's the lowest PE that it's been since like 2010 or something. So ridiculously low PE. They have a 770 stores. And here's the good news: they're making a lot of net income every quarter. A couple hundred million in net income every quarter. Every single Q4 is like their best quarter. They make the most amount of sales. But here's kind of why the stock fell. So the revenue grew by 7, but the net income fell by 2. So that means they're losing their margins. But again, I think that this one got more oversold than it should have. So that one could be worth looking into. Ben K said, Hood stock. Hey, yeah, dude, Hood is actually one of my best stocks of all time. Would you have any insights into why CRMD is up? Oh, yeah, we'll look at CRMD too. Here's Robinhood. This one's over $100 a share now. Ridiculous. I love this company. And here's why they deserve probably all the hype around them. I mean, look, the revenue's up 45% year over year. So look, 990 million of revenue and 390 million of that was net income. Those are some ridiculous margins. They're making a lot of crypto transaction fees right now, which is making them a boatload of money. But anyway, Robinhood, this is actually my best performing stock of all time. I'll show you that. I go over here, we're up. We're up 666%. I don't like that, but look, they're up 6.5% on the day. Really good. And I think we're at like an all-time high in here. What did I just click? No, not cash management. All time. So yeah, all time we're up 16% in here. We do got some losers in here, of course, but yeah. We've underperformed the market in this portfolio, but we do have some really good winners. So Robinhood, people are really starting to take them serious. They're super profitable. So let's see. CRMD. Core Medics. So I don't remember this name, but they're on my watch list. So let's go look at the financials here. So DefenCath is what their revenue is from. Oh, wow. So look at this growth here. Wow. The revenue is 39 million the most recent quarter. And out of that, they made 20 million of net income. So they have it's hard to see because of this one quarter, but 52% net margins in the most recent quarter. Pretty ridiculous. And they're growing their assets. Geez, man, I like this company, actually. They're really growthy. Where's the revenue come from? All the revenue comes from the US. So yeah, I would still be careful because they are a small cap. I mean, a $900 million name, but still, I like that balance sheet, the margins, the growth. So pretty interesting. All right, let's see. What up? Ticker symbol team. Aaron, what's up? And then we can look at also PBM stock. Yes, sir. So here's Atlassian. So this app is telling me right here that what is this technical analysis? There's a bearish continuation triangle. Well, that's technical analysis. Let's go look at it from their financials because that's how I like to judge the company. So let's see here. Let's go to the revenue. GEV's up 100% year to date. Isn't that nuts? Same with CEG. So the revenue is up 14%, but they're still losing net income every quarter. So I think that that's what investors aren't happy with. They're still losing net income every quarter, and a lot of it too. So yeah, that's kind of the bad news there that they're not making net income yet. So 42% of the revenue comes in the US though, so that's interesting. But yeah, I don't know. That's probably why the stock has been struggling for a while. C said, "What app is this?" Hey, yeah, C's. If you want to get this software that I'm on, it's in the link tree in my bio. It's the first link there. It's my favorite lowest fee brokerage for analysis. I love doing analysis on here. Oh, Meta stock. You know what? That's a perfect stock for us to analyze. So let's go pull up Meta, man. I love this company. They own Instagram, Facebook. Facebook ads print money. And they have the Facebook Marketplace. It's like just a gift to the community because they don't make any money off Facebook Marketplace. But anyway, let's look at Meta Platforms right here. I love this stock right here. First off, the PE is a 28. So this is kind of one thing I like to talk about. Look at this. The stock is at an all-time high today. I mean, or a couple bucks off all-time highs, but the PE ratio, the price to net income is not at all-time high. So the valuation is actually pretty fair, and I think Meta has the ability to stretch up to like a 30 PE or like a 31. So it could go up another $100, I think. Also, look at their active users. This is like the unbelievable part. They have 3.5 billion daily active users. I mean, half the world is on one of their apps a day. I mean, incredible. And look at this net income. They're making like 20 billion in net income a quarter. They're growing their margins too. This is a $2 trillion company with 40% net margins. I mean, just absolutely ridiculous. So yeah, they also just started paying a dividend. Meta's huge on buybacks too. So look, Meta making 20 billion of net income a quarter. What are they doing with all that money? Well, if we go to the buybacks, they literally spent 10 billion this quarter buying back their own stock. 12 billion the previous quarter buying back their own stock. So super shareholder friendly company. And look, their dividend only cost 1.3 billion. Super low cost dividend. So anyway, I love Meta. And they also own Threads. Threads is nearing the same amount of daily active users as X, which is really interesting. What platform is this? Yeah, hey, Brock, sorry again. If you want to get this platform I'm on, it's a broker. It's in the link tree in my bio. It's that first link there. It's an affiliate link too, so it helped me out. If you deposit $100, but it's free. You don't even have to deposit. Yeah, GEV's up 100% year to date. It's this whole sector, man. Like if you look at Constellation Energy, they're all doing incredible because of the electricity demand forecast from PJM. So power, wind, electrification. You can see the net income here. They're making a lot of net income every quarter. I actually chose, instead of GEV, I actually chose to buy CEG. So wow, dude, this one is just doing so good today, up 5%. So anyway, yeah, this is my dividend growth portfolio, by the way. Look at this. See, Robinhood keeps begging me to enable margin. This is how they make their money, but no, do not go into margin. All right, let's see. So yeah, GEV is interesting. Another electricity infrastructure play. All right, so let's see. DSP is an ad play based off Meta and Reddit solid earnings. Let's see, what is DSP? And I own Reddit as well. I own Reddit and Meta, so might be biased, but let's see. DSP stock, it's a very small one, an $800 million company, so you do got to be careful about that. But let's see the net income. So net income is a little choppy, but they did make net income these 2-3 quarters. So as long as they can keep that trend up, that's great news. What about sales? So their sales are up 32%. Decent balance sheet. So cash from operations did fall. Huh. It's not the end of the world. Actually, this one's decent. It's decent. Where's the revenue come from? All from the US. Hey. Another advertising play is actually PERI, my biggest loser down here. What are your top 3 buys right now? I'm liking AMD, SoFi, HIMS. Yo, I love SoFi, man. One of my top 3 buys in a stock I bought today, it's not growthy as a lot of investors would probably like, but I bought Progressive. I bought them today, actually. That's that little buy order right there. Ticker symbol PGR, Progressive, that insurance company. All right. I want to look at SoFi too, because SoFi had outstanding earnings to the point where they deserve to be over $20. Like, they deserve it. So this is a great company. UPS for the dividend portfolio. Hey, we'll look at UPS too. And what up, Kenneth? Hope y'all are having a good Monday. So here's SoFi Technologies. They do the student loans and stuff, but the best part about SoFi is actually the financial services business. They're a fintech. They have their own banking charter. And look at the growth here. This is like the unbelievable part. The revenue's up 101% from the previous year. That is outstanding growth. And that's why they deserve to be doing so good. They deserve the high PE because they're so growthy. And they made $100 million just this quarter. So incredible net income. So people are really starting to take them serious. When did you buy Reddit? Oh, it was a while ago. Here, I'll show you my Reddit position. Reddit. Yeah, we're up a crazy 106% on Reddit right now. So yeah, Reddit had incredible earnings. And if you've been on my streams for the past couple of weeks, I've been saying Reddit's a $200 stock. If anyone here like Jello, I've been saying Reddit's a $200 stock, and wow, it's at $200 today. So I want to, like, the bull case is like the best it's ever been for Reddit right now. A lot of people think Reddit is a meme company, but if we judge Reddit for their financials, this is no meme. This is an incredible growth stock with incredible fundamentals. So let me pull this up for you real quick. Oh, hold on. The thing froze here. Dude, sorry. My Wi-Fi is terrible today. I do apologize. So let me see here. There we go. Hopefully it should connect back. Are you buying stock or options? I mainly just buy stocks. I don't really do any options really. I mainly just buy and hold like great high quality companies for the long run. So yeah. Man, dude, this thing is really giving me a hard time right now. Oh yeah, I wanted to look at UPS. I think UPS might be a dividend trap, and I actually want to cover that. Oh my goodness, bro. It is not one to connect back to the thing. So yeah, there we go. Okay. We got it working. So Reddit stock. Sorry, it disconnected. So anyway, the bull case is the best it's ever been for Reddit. This is the incredible part. If we just judge them from the revenue, I mean, the revenue grew 77% year over year. Incredible growth. They're the most profitable they've ever been. They made 90 million of net income, and they have a fortress of a balance sheet. They actually have no debt at all. We go to the cash and equivalents. They have $2 billion of cash, record amount of cash, with literally no debt at all. They're earning interest on their cash. They're keeping their cash in these 1 to 3 week treasuries, milk and interest. So anyway, I love the growth on Reddit, and they deserve to be doing good in my opinion. Their ARPU, which is average revenue per user, is $5. So they're making a boatload of money. I don't know how, but they're making a lot of money. Do you like any defense stocks? I love NOC. This is my ideal pick, but it's tough to buy this one at all-time highs. I also like Raytheon, ticker symbol RTX. Yeah, Northrop Grumman, 1.5% yield, only a 28% payout ratio. The PE is still a 21. So, pretty fair PE ratio. The PE is the net income multiple, mission systems, aeronautics, defense systems. So they're in all these industries. And look at this net income. I mean, they're making, pretty much $1 billion in net income a quarter. So pretty good. I like that one for the dividend and buybacks and the industry. I still don't understand options, so I stick to stocks. Hey, yeah, yo, that's the thing. If you buy like just growthy companies, you can get some returns that feel like call options. Like, look, Dave, AMD, Robinhood's up 600% for me. SoFi's up 250. You can get like call option returns, but yeah, you just buy and hold great high quality stocks and then just don't sell them. How's PSIX? Yo, Kevin, yeah, that's another stock I've been talking about. PSIX, we're up 39% on them. I can't believe it. This has been another one of our better performers. We bought this stock at all-time highs, and then they just continue to keep on hitting new all-time highs. So that was a great one. Printing money now. Printing money. So, all right. Are you still invested into Lockheed Martin? I do not own any Lockheed Martin. I'm surprised you remember that. The last time I owned Lockheed Martin was like literally 6 months ago plus. It's got to be over 6 months since I've last owned them. MRVL. So yeah. Oh, I wanted to look at UPS. Let me look at UPS real quick. So here's why I think this one might be a dividend trap, and you got to be careful buying into this one. So if you buy UPS right now, you're buying a company that pays you 7.7% of your money back in a dividend. So most people are like, hey, that's a crazy dividend yield. But here's the bad news. If we look at the net income the most recent quarter, or like the two most recent quarters, they made 1.2, 1.3 billion. So remember this number. We'll just remember the most recent quarter. They made 1.3 billion of net income just in the most recent quarter. Well, let's go see how much the dividend cost. I love digging into the numbers here. And look, the dividend cost 1.35 billion. Literally all their profits got eaten up to the dividend, to where they couldn't even afford the dividend. So in the past 2 quarters, they couldn't afford the dividend. So it's tough. I think there might be a risk of a dividend cut here. And I just like showing you the numbers for yourself. You can draw your own conclusion. But when I see the dividend cost more than the net income, it's tough. And there might be at risk of a dividend cut unless things start to get better. Someone said, wait, what is this? When did you get in Toast? Oh, when did you get in Toast? It was a while ago. Let me see, actually. Toast reports earnings this week. Well, here's kind of the dates here: 425 to so February 2025, and then a little more in April. But yeah, here's my buy orders. Those little buy circles. I love being fully transparent. Yeah, if anyone has any questions for me, you want to know my total return, year-to-date return, or individual stock return, just ask me. I'm fully transparent. I feel like no other TikToker, no other streamer does this. I'm fully transparent. I'll show you all my returns. I mean, I don't got nothing to hide. I mean, this is crazy. We are up, or at one point we were down 14% year to date, and now we're finally green 11%. So yeah, pretty good day to own stocks. Congrats if you own stocks today. Thoughts on Pan W? Yeah, so that's actually a stock owned in Nancy Pelosi's portfolio. So we can kind of see the super investors here. And one of the stocks in Nancy Pelosi's portfolio is actually, I think it's toward the bottom here. Yeah, PANW. This is Pan W, Palo Alto Networks. It's the largest cybersecurity play out there. And I love this company. You know, cybersecurity is an industry that's always going to be more popular. AI is making hackers get better, and we just need better cybersecurity defense. And look at this. I love this part about the company that 55% of their revenue comes from their subscription. And look at this subscription revenue growth. I mean, this is a company I'm comfortable with holding on forever. This is incredible returns. I mean, it just hits a new record every quarter, every year. It's up 18% year over year. So incredible growth on the subscription revenue. They're also making a boatload of money. A couple hundred mil of net income a quarter. 2 billion plus of free cash flow a year. I mean, just pretty good numbers there. So yeah, that's the main cybersecurity play. Yeah, these super investors have to reveal all their holdings by SEC law. So you can see like Buffett's portfolio. He got Coca-Cola, Bank of America, obviously. Anywho, let's see here. Berkshire Hathaway. Since we're talking about Warren Buffett, let's go look at BRK, which is Berkshire Hathaway. This is kind of his like company. No way. Dang, they're down 3.4% on the day. They reported earnings. So let's see what they were. They beat on revenue, beat on net income. So they beat on revenue and net income, but the stock still fell. Maybe it was some weird guidance or something. But look at this right here. If anyone's heard of Geico before, Geico is owned by Berkshire Hathaway. It's a huge insurance company. That's a good chunk of their revenue. They're just a really diversified, company. They obviously own some stocks like Apple. They own BNSF. They own all of Dairy Queen. So they own Dairy Queen. They own like that Pink Bunny Energizer battery brand. They own just a lot of stuff. So yeah, they're kind of like an S&P 500 alternative. Let's see. Definitely want to get into more long-term positions. Yeah, hey, what up, Eli? That's what's up, man. Let's see. NVO. Yeah, we've already looked at NVO a few times. I'll look at them one more time. I'll be really quick about this. And someone said, what software is this? Yeah, hey, this is actually Labaxa. This is a brokerage. This is a software. If you want to get this, I'm on. It's in the link tree in my bio. It's that very first link there. It's called Moomoo. It's an affiliate link too, but it's free. But if you deposit $100, we'll both actually get some free stocks. But anyway, here's Novo Nordisk. This is the company that owns Ozempic. So this is your main weight loss play. So yeah, if we go to where the revenue comes from, 95% of revenue comes from their obesity care products. And their actual revenue and earnings were great, incredible. 4.2 billion in net income just this quarter, but it's the guidance that hurt them. They actually had some lower guidance, and also they said that their Ozempic patent expires in a few years, which sucks. But you still get a 3.3% dividend. The PE is the lowest it's ever been. I think it might actually be worth a nibble on that company. All right, let's see. Best data company right now. I mean, like pure data, that'd probably be like a Palantir or like a Snowflake, but I don't know. Those are both pretty highly valued companies. Palantir reports earnings today. So in 2 hours exactly from now, Palantir is either going to be up or down a bunch because they report earnings. Palantir is huge because a lot of the revenue comes from the government and like police stations. The government revenue is up 45% year over year on Palantir. Commercial revenue is also up 33%. Really good growth. They also have no debt. Palantir is debt-free, $5.43 billion of cash. Pretty good. So anyway, too high of a valuation for me on Palantir. Where does NVO do most of their business? Let me go back and check that for you. So NVO, we go here to the market. So yeah, look at this. NVO sells most of their product in the US, then they're in the EU, rest of world, and all these other countries. So yeah, that's what's cool. You can kind of see where the revenue comes from geographically. What does your portfolio look like? Hey, here's my portfolio right here. Here's how it's doing today. Amphenol Group is doing really good. This stock right here, APH, is acquiring COMM. So If we go to COMM stock, if it pulls up right here, this stock's up like a ridiculous 80% or something. 89%, it's up even more. So yeah, APH is acquiring this company. So pretty interesting. Like data farms, Microvast. Ooh. Is there any personal stocks you recommend? I like again, not financial advice or nothing this is. I'm not an expert. And by the way, I sell nothing. I don't have a course, book, Discord, WhatsApp, Telegram. Just trying to give my opinion. But a stock I actually bought today was some more Progressive Corp, PGR. It's an insurance company. I think it's at a pretty fair valuation right now. But don't just follow me into a stock. Always go do your own research on it. But the fundamentals are incredible over there. So anyway, here's Microvast, and this company really blew away analyst expectations because they were priced for bankruptcy before this huge gap up. This was a literal 20-cent stock, and now it's $2, so it's 10x, which is pretty incredible. So here's why though. Look at the orange line. The orange line is what the analysts were expecting. They're beating these expectations by a huge gap, and mainly it's the net income. So analysts were expecting them to lose 2 cents of EPS, and they made 19 cents of EPS. So that means they made 61 million of net income, and that was technically real as well. So huge growth, 43% year-over-year growth after growing 73%. Net income's most profitable they've ever been. Cash flow is great. So yeah, they've really turned things around, huh? Beating that bankruptcy probability. I prefer B in. Oh, is that Brookfield? Wait, B in. Oh yeah, Brookfield. Yeah, this is a nice one as well. Oh, applesauce. We can look at Rocket Lab. Wait, Brookfield. Let me see how they're doing. I know you got to look at like the operating profits. Yeah, they're in private equity, infrastructure, asset management, real estate, renewables. So yeah, very diversified holdings there. And you mainly want to look at the operating profit. They've had some little adjustments to their net income, but you really just look at the operating profit. They're printed money over there. So yeah, or KLB. This is my favorite space stock of all time. So there's Lunar, like Intuitive Machines, and ASTS Space Mobile. Those are trash compared to this. Like I wouldn't buy either of those companies. I prefer Rocket Lab. So we look at Rocket Lab right here. Most of the revenue comes from their space systems business. And look at the growth here. Up 45% year over year. Incredible. They also have a huge backlog, a $1.5 billion backlog of orders that they haven't fulfilled yet. They also just acquired a company for it's like $500 million, a new company. So that'll even help their growth even more. So that's crazy. I own SHLD ETF. Only way I own it. So let's see. SHLD, this is the Global X Defense ETF. Oh, this has actually been a monster performing ETF because this sector has been on fire. Check this out. So yeah, we look at the fund. We can go to its top holdings and see what stocks it owns. And it owns Palantir, which has obviously been performing well. Raytheon, Rain Metal. I didn't even know Rain Metal. I didn't know they could invest in non-US companies. BAE, Lockheed Martin, Northrop Grumman. So yeah, these are really good companies that I would own a lot of those individually. So I like that SHLD ETF. 5 stocks to buy with $1,000. Yo, email. I'd probably just pick stuff like I'd pick Amazon. I'd pick the S&P 500 first of all. So I'd buy the S&P 500. Then maybe buy a little bit of Amazon, Google, Meta. Yo, Moses said CRDO did be good, brother. That's awesome, Moses. I saw them doing really good today. I wish I owned them, but I'm glad you got into them. Rivian, please. Hey, so speaking of Amazon, here's Rivian. And anyone see like those electric Amazon delivery trucks? Well, those are made by Rivian. And this one's had a rough IPO just because they're burning through a lot of money. So the good news is if you go to the shareholders here, the largest shareholder is actually Amazon. Second largest shareholder is Porsche. They own 12%. So kind of backed by Amazon here. It's really these losses that are scaring me. Look at that. They're losing 500 mil. A bill, 750 mil. So, but it's getting better, 62% better. So that's the good news. So they need to keep up this trend of losing less and less money. But yeah, that's the kind of the interesting thing. The Rivian trucks are really cool. Can you check FCX stock? What up, Applied? Let's see, FCX stock. What's this one? Freeport. So MC Morin. So a huge company, actually. I didn't expect that. $56 billion company. Wow. So, but unfortunately, the stock is the same price that it was back in 2007. So, but let's go analyze them, though. I don't know if this is an American company, but I guess we're about to find out. New Egg Commerce. So, what's the ticker symbol for New Egg? I think I've heard of them before. So, Rod and Refining Indonesia operations. So, if we go to the market, so yeah, look at this. Only 30% of the revenue comes from US, then Japan. Switzerland. So you get a lot of international exposure here. Let's see net income. Yeah, look at this. They're making a boatload of money. This is in USD as well. 1.5 billion just in the most recent quarter. So they pay a dividend, a 1.5% yield as well. Not too bad. I can't hold the international stocks myself. I'd even how, but I'm not complaining. Yeah, hey, that's nice. I like that. Like someone was talking about MLPs earlier. This is a really cool ETF right here. AMLP. This gives you exposure to MLPs, and they own all these MLPs that would normally pay you a K1 tax form. But this ETF doesn't pay you a K1 tax form. It doesn't give you one, and you still get the crazy dividends. So here's a nice little ETF. I like BIZD is cool too. All right, let's see. What about MU? Yeah, is that Micron? Let's check out Micron as well. So Micron Technology. So this one's been pretty decent performing. They're kind of an NVIDIA competitor because they're in the computer networking industry. So let me pull this up right here. So yeah, look at this. 55% of the revenue comes in their computer networking business. And look at the growth here. This has been like the main driver here. It's up 97% from the previous year. So that's pretty incredible growth over there. So that's kind of why I like them. And if we go to the net income as well, they're also the most profitable they've ever been. Because it's kind of scary. If you zoom back to last year, you couldn't buy this stock. They were losing a boatload of money, but they've had a huge recovery and are now making billions every quarter. So yeah, the most profitable they've ever been, get a nice dividend. So yeah, nice growth. Nebius has been running. Hey, what up, C's? So that's actually a stock owned by NVIDIA. So if you go to the NVIDIA portfolio right here, these are all the stocks that NVIDIA owns. One of the stocks they own is actually Nebius. So check this out. And again, just because NVIDIA owns something doesn't mean you should own it. But here's what I love about this stock. If you go to the revenue, this is so impressive. Again, it's easy to compare to small numbers, but look, the revenue went from 11 million to 55 million. It increased 385% year over year. So that's the kind of growth I like to see. Oh my goodness. They're really going to do that. Okay. Oh, hey, well, someone said, hey, Kaz. Yeah, hey, if you go to that link tree I just typed in the chat there, it's in the link tree in my bio, the very first link there if you want to get this software that I'm using. It's actually a brokerage. It's my favorite one. But yeah. Eric said, you got a follower. Thanks for answering my questions. Yo, Eric, thanks. I'm going to follow you back. Thanks for being so nice. Yeah, hey, by the way, if y'all want to hit the follow button, we go live every day, sometimes twice a day. We just analyze stocks and stuff. I sell nothing. I have no course, book, Discord. I do have an affiliate link, though. I guess if you want to sign up for this app, we'll both get some free stocks if you deposit $100. But that's it. All right, let's see. QQQ or VOO. Hey, someone said, should I buy the QQQ? I would actually buy, if you're just going to plan on holding it forever, don't buy the QQQ. Actually buy QQQM. Here's a little life hack. So this is actually the exact same ETF, exact same NASDAQ 100 strategy, but with a lower expense ratio, which is exact same strategy, exact same holdings, but they don't market this one because they would make less money. It's also run by Invesco. So yeah, QQM is one I like, but I also like the S&P 500 VOO. What was the reason for buying Progressive? Yo, I made a YouTube video about that, Armando, but the sound fundamentals here, actually, I'll pull this up for you. I'll be really quick about this. I bought this stock today, by the way, so this is why he's asking that. I think that first off, the market's at pretty close to all-time highs. This one isn't, so I like that, first of all. And look at this PE ratio. The PE ratio is a 13. We compare that to the industry average of a 12. I think they deserve their premium valuation because they're Progressive. We can look at this right here, the personal lines. It just hits a new record every quarter, every year. If it would load here, sorry, my Wi-Fi is not good today. Someone said, what app? Yeah, hey, sorry, I don't mean to repeat, but again, if you want to get this app that I'm on, it's actually a broker software. It's in the link tree in my bio. It's that very first link there. So anyway, the Progressive personal lines revenue is at a new record. It's up 23% from the previous year. Just incredible growth, $19 billion just this quarter. And out of that, they made $3.2 billion in net income. Incredible net income growth. So they're just super profitable. They pay special dividends and everything. Yo, Shark said, look at the SMH ETF, semiconductor ETF. Let's check it out. Yeah. So Well, we can look at the trade desks too. They're an advertising play, but here's the SMH ETF. This is the semiconductor ETF. So if you don't know what to buy, if you're like, I don't know whether to just buy Nvidia, Taiwan Semi, Broadcom, AMD, which one do I buy individually? Well, you could just buy this ETF right here that just lets you own all of them. So it's just you're betting on the whole sector here, and it's had some pretty insane returns. 2019 it was 71. Now it's 290. So wow, pretty good returns. Let's see. Yeah, no problem. So, what are ETFs? It's just a exchange traded fund. So, it's a fund on an exchange that just holds a basket of stocks. So, here's the trade desk right here. Would you buy NVO? I would nibble on that one, Daniel. I would buy a little bit of NVO. I wouldn't go like a huge position in them. But here's the trade desk right here. Someone said, why are they so beat up? They're actually doing pretty good the past couple of weeks here. But the reason they got beat up right here is because of competition from Amazon, and they lost Netflix as a partner. So Netflix used to use the trade desk to find all their ads as the middleman. Now Netflix just does it themselves and cut them out. But I actually love the trade desk, and their financials currently are really good. So first off, the revenue's up 25%. So really good revenue growth. Revenue's up 25. Net income's up 60%. So what does that mean? That means they're growing margins. Net margins are up 27% year over year. So really nice margin growth there. So yeah, that's an advertising play for like TVs. You know what up, Michael? He said FAN stock. What's this one? FAN. First Trust Wind Energy ETF. So let's see what its top holdings are. Vestas Wind Systems, Northland Power. So I don't know if these are. Oh, there's GEV. GEV is a good one. Some of these are like I think this is an Australian company right here. But that's an interesting ETF. They haven't been performing too well. But that's niche. That's interesting. I guess if you want to bet on wind, you could do that. Do you only invest in ETFs in your Roth, or do you buy them? Yo, I actually here I'll show you my Roth IRA. I have a pretty trash Roth IRA, and I don't really recommend people copy this. But hey, we're up on the day. I think we're at like an all-time high or close to it. But yeah, we have these random growth stocks in here. Here's my total percent change on every single stock in here. So, if it'll load here, we're up on every stock except for one in here, DCTH. But yeah. Anyway, yeah, here's my main taxable. I love blue chip S&P 500 companies like Google, Meta, McDonald's, Constellation Energy. These great holds forever, in my opinion. Yeah, no problem, Pelican. Could you review BBIO? Well, let's hope this one has something here. So let's check it out here. So FXAIX, so that's an index. I actually can't view that, Stella. I apologize there, but here's BBIO. A nine, well, actually, hey, this is actually a really good market cap, a $9.7 billion company. Let's go look at its financials here. I am curious. So, business of identifying and advancing transformative medicines to treat patients. Hey, this is not great. So, they're losing a lot of money. 160 mil, 200 mil, more liabilities than assets. What about revenue? And the revenue was 116 mil. It looks a little choppy for me. Like it's 116 mil and then it's nothing. Like I would be careful with this one. Nothing's really blowing me away here. I don't love that they have a lot of liabilities. I mean, 2.5 billion of liabilities. What's the market cap? 9 billion. Yeah, it's tough. Oh, ticker symbol fun. Is that Six Flags? Yo, I think that's what this ticker symbol is. Mercedes? I don't know if Mercedes is public. Yeah, has anyone heard of Six Flags before? It's like a roller coaster theme park thing. Their stock is publicly traded, but the stock has not done too good. It's down bad since 2019, unfortunately. But let's go look at their financials. Let's see if they're starting to recover. Because I know the cruise lines are starting to recover, but not this one. Yikes. So look, lost 200. How did they do that? They lost 200 mil this quarter, 200 mil last quarter. It's just the numbers are too choppy. They're overall losing net income and not making any. So yeah, I'd be careful with that one. They have a dividend. They can't afford to pay a dividend. That's why the payout ratio is negative. Yeah, I don't know if that one will really outperform in the long run. I would be careful with that one, my friend. Ooh, the ARKK ETF. So yeah, that's the Kathy Wood portfolio. Let's pull it up here. Yeah, let's pull it up. Archer Aviation, Open Door. Yeah, we'll check these out too. Well, here's the ARKK ETF. This ETF was huge this year because the S&P didn't even come close to appreciating this much. It went from 60 to 160. I mean, because of the Tesla calls, she had some insane appreciation right here, but then lost it all, which is unfortunate. So it has been underperforming the market. on the 5 year by crazy. But here it's top holdings. We kind of judge the ETF by what is in it, 10%. So if you put $100 in this ETF, $10 goes to Tesla, then $7 goes to Coinbase, $6.80 to Roku, Roblox, Shopify. Man, I love Shopify as well. We can just see her portfolio over here. Actually, we go to the Kathy Wood portfolio. There are some stocks that I love that she owns, like Robinhood. Palantir is good. I don't know if I'd buy Palantir right here, though. They report earnings today. But look at Shopify. This is another stock that I love. I love Shopify. Super growthy. I'd put this one on your watch list. They're an e-commerce play. And look at the growth here. I mean, this is the kind of stock I'd want to hold forever. I mean, full year 2019, 1.5 billion of revenue. Now it's 8.9 billion of revenue for the full year 2024. Just hits a new record every quarter. Look at the FCF, which is free cash flow. Couple hundred mil every quarter. Grew 50% year over year. Making a couple hundred mil in net income too. Anyway, I really like them. All right, let's see. FMS stock. Let's see. FMS. So let's see. Fresenius Medical Care. So a $15 billion company, but the stock has kind of been struggling on the weekly, so that's not great. But let's go look at their financials because that's what kind of matters here. So first off, the PE, the price to net income multiple is a 20. So they're trading at 20 times net income. Care delivery. Maybe it's like for like pregnant women. I don't know is that what care delivery is? I don't know. But look at this. They're making a lot of money. I mean, like nearly 200 million of net income a quarter. So, I mean, there's no bankruptcy risk here. That's a lot of net income. And do they pay a dividend? They do. 2.6% yield there. Not too bad. So, hey, that's kind of a healthcare play. Open Door. So this is one I'd stay away from. I think this is just a momentum meme stock right now. What is this? Shares jump 6% after company meets minimum bid requirements. So yeah, they were about to get literally delisted from the stock exchange because the stock was under $2 a share. Well, now it's $2.40. So they're still alive right now. But here's the thing. I think this company has actually real bankruptcy risk. Like someone on CNBC came and like said this is a 50x stock, causes momentum. This shouldn't happen. But just remember, the whole company is worth 1.8 billion. It really should be worth less, but the whole company's worth 1.8 billion. They're losing nearly 100 million every single quarter. So that's the one thing I would be careful with, I would be careful with that. Yo, Devish, no way, dude. Hope you're having a good Monday. Good to see you, man. They merged with Cedar Fair, which is going to help them out. I saw that. Like the assets really exploded, Michael. Yeah, you're right. For ticker symbol FUN. Maybe that's why the net income was so negative related to that acquisition. So, Muin said BLOX stock. Is this Roblox? No, that's RBLX. What up, Brendan? Open door to the moon. So this is the Nicholas Crypto Income ETF. So I'm guessing it just like sells calls on Bitcoin. It owns a lot of Bitcoin related stuff like the iShares Ethereum ETF, Galaxy Digital, Coinbase, Robinhood, NVIDIA. So that's an interesting ETF, actually. I wonder what the expense ratio is. You know what? Let's find out. Oh, it should show it. Expense ratio. It's a 1%. So you instantly lose 1% of your money just from an expense ratio every year. So I would be careful with that. It's a bit high because that'll kind of compound over time. Yeah. All right, let's see here. What does Open Door do? They sell like you can go into a house, Open Door. It's like real estate. They're honestly, Open Door is begging for low interest rate environments. That'll really help out the company. Oh, Microsoft. Yeah, dude, let's check out Microsoft. They're up 2.5% on the day, kind of recovering from these two red candles from earnings, but the earnings were really good on Microsoft. So let's go analyze this company right here. The PE is a 39, just a little high for the company, but again, they deserve it. It's Microsoft. They have these three main segments of revenue: productivity, the intelligent cloud, and the personal computing. The intelligent cloud business has been the best performing segment. I mean, go to it on a quarterly basis, it's up 25% from the previous year to a new record, 30 billion of revenue. The Azure cloud has taken market share. It took 1% market share away from AWS, actually. And look at this net income. I mean, they're printing money. They have a better credit rating than the US government. Look at this, 27 billion in net income just this quarter. I mean, ridiculous, and it just keeps on growing. I mean, they're growing their margins too. Yeah, revenue's up 18, net income's up 23, so they grew their net margins. They also are hiking the Microsoft 365 subscription by 30%. The price is going up by 30%, and that went into effect like literally 2 weeks ago. So anyway, that's interesting. What do you hold? Well, in this portfolio, these are all the stocks that I got in here. I got some other portfolios as well. Is this yeah, hey, this is a brokerage right here. Yeah, if you want to get this brokerage, it's called Moomoo. If you want to download it with my affiliate link, it's in the link tree in my bio, the very first link there. If you go and deposit $100, we'll actually both get some free stocks. And I love doing analysis on there. Like we could see where Microsoft's revenue comes from and all that. So, ooh, this is a really cool stock. This is Grab Holdings. So this does exactly what Uber does. So this is an Uber competitor, but not really a competitor because Uber is actually now the largest shareholder of them. I remember looking at this company a year ago, Uber didn't even own any shares. Now they're the largest shareholder, they own 13%. Toyota also owns 5.4%. But yeah, Grab Holdings literally just does exactly what Uber does, but in all these other countries. They're actually really cool. Notice the US and Canada aren't on here. So that's why I think it was genius for Uber to buy this. It gave them instant international diversification. And they're making net income every quarter. This is a profitable company. Free cash flow is really good as well. 14% of this free cash flow goes back to Uber. So hey, I would happily own Grab and I'd happily own Uber. Uber's another great company. So you talk fast, but it's hey, sorry. We got a lot of stocks to look at, so I do apologize if I'm going fast. But I just try to be respectful, get to everyone's stock here. And Spotify, yo, I wish I was buying the stock instead of paying for their subscription because they have had incredible performance and they deserve it as well. So check this out. Wait, hold on. They did a price hike. Wait, Spotify shares jumped 6% amid plans to raise subscription prices. Yo, that will move the stock. So check this out. Here are some stats. I love the stats that we get on this. Check this out. Premium subscribers are 276 million. Let's see. Yeah, premium is 90% of the revenue. Then they have the ad-supported revenue. But let's see how the premium revenue is doing. It's up 11% year over year. What about profitability? So yeah, look at this free cash flow. This is insane. They're making close to 800 million of free cash flow a quarter. And these year-over-year growth rate numbers are insane. So at this growth rate, what's it going to be this time next year? Ooh, so the net income did go negative. Was that real though? It was not real. So we can tell by looking at the operating profit. So they had some little one-time adjustments to the net income. So dang, it grew 52% still. Really good numbers on Spotify, man. Yeah, this is one I want to get into. They're deleveraging their balance sheet as well. Look at this. As the liabilities used to be 58% of the assets, now it's only 50% while growing it. So incredible. Nick said what happens is, yeah, hey, sorry, if you want to get this software that I'm on, it's actually a brokerage. It's in the link tree in my bio. It's that very first link there. Oh, we were looking at this in European. So I didn't know. Spotify is actually a European company. So we can kind of switch the revenue to US dollars. EU and dollars are pretty much at the same price. So it doesn't matter. But anyway, yeah, they're an EU company. We'll look at a few more stocks here. Then I got to run, man. We've been live for over 2 hours. This has been great. By the way, if you want to hit the follow button, I'm going to do another live stream later tonight. So we try to stream every single day. We just look at stocks and stuff, and I sell nothing. I don't have a course book, Discord. I don't got none of that. Do you do meme coins? Not really. I don't really cover crypto. But here is actually a really cool crypto-related stock that CB just said. This is ticker symbol NU. So this is actually a crypto bank out of Brazil that is printing money. Like absolutely ridiculous. So I want to show you the financials here. So what do you think of SONN? Yeah, we'll look at SONN after this too. NVO, it's oversold. I do think NVO is oversold, and I think it's worth a nibble, but not a lot amount. Is there a stock you'd buy right now in a heartbeat? Probably. First off, I bought Progressive this morning, ticker symbol PGR, but Amazon's starting to look really attractive. So NU Bank, this is a crypto bank out of Brazil. So if we go to where the revenue comes from, 93% of it comes from Brazil. And that's actually where crypto is the most popular because the currency sucks down there. So they use crypto. And if you go to the net income, they're printing money. 500 mil the most recent quarter. These year-over-year growth rates are ridiculous. So NU, I don't know why they're suppressed so much. Hi, I just followed you. Can you please look at LAE? Yeah, we'll look at LAE as too. I don't like that one. I remember looking at that one. But let's see. What is SONN? So, yikes, I would be careful with this stock. They're a $2 stock, and they're pretty much at all-time lows right now. So let's see. Yeah, look in the market cap right here. The whole company is worth $17 million. So this isn't normally the kind of stock I like to cover on here. The whole company is worth $17 mil. and they lost 3.5 million this quarter, which is literally a huge chunk of their market cap. Because when your revenue was 1 million, was that real? Yeah, I wouldn't buy that one. Super risky. Um, let's see. LAES. Let's check it out. I haven't looked at this one in a while. Is this CLSQ? Yeah. So this is another one that I just don't see. This is a momentum like swing trade. I don't see any reason to buy and hold this one really for the long run. So a $400 million company. So dang. So a $400 million company, and for the full year 2024, so the entire year of 2024, the revenue was 11 million, and it fell 63% from 2023. And they lost 21 mil of net income. Luckily, they've been able to fortify their balance sheet by issuing shares. That's the one good news. Because the stock has run up so much, it was during this time, they diluted the crap out of the shareholder, it got a bunch of cash, and then the stock fell. So that's why it caught it. Anyway, that I wouldn't buy that one. AG&C, yo, that's a dividend trap. So AG&C stock, a lot of people like this one for the dividend, but to be honest with you, I mean, look at this stock. It's pretty much at all-time lows. So you look at this dividend. Yeah, you get a 15% dividend, but it's not really sustainable. Payout ratio is 154%. The stock price has collapsed as well. So I don't really expect you to outperform the market with that stock, but you're basically buying it to maximize your dividend income. So can you do Zoetis? Yeah, this is your animal healthcare play. Yo, Eduardo, thanks so much for subscribing, man. I appreciate that. Thanks so much. So here's Zoetis stock right here. This is the animal healthcare stock right here. And the valuation, the PE is the lowest it's been in a very long time. The PE is a 27. I mean, historically, it trades at a 38. So really cheap. And look at this industries that they're in. Parasiticides, vaccines, dermatology, anti-infectants, and it's all for pets. It's all pet care. And I think the reason why the PE is starting to fall a bit is because of slowing growth. And again, it's not the end of the world here, but the revenue is only up 1.3%. Barely beat, or actually doesn't really beat inflation, but I think that's why the PE is starting to go down, because the growth isn't growing that much. But they are holding margins strong. They're printing money. Over $2 billion of net income a year easily. And they're doing a bunch of buybacks as well. So look at this. Remember that they made $630 million of net income just this quarter. What are they doing with all that money? Well, let's go find out. Yeah, look at this. This is the buybacks they're spending every quarter. They spend $400 million, nearly $500 million every single quarter buying back their own stock. And here's how much the dividend costs. The dividend only costs $200 million. So they're really spending twice the amount on buybacks than they are on dividends. So shareholder-friendly company there. You still get a 1.2% yield, another basically 2% return from buybacks. So I do like them. Animal healthcare play. Yo, XYZ Steve said Starbucks. And I do feel bad if you own this stock. They haven't been doing too terrible, but I think there's sadly some real dividend cut risk here. Starbucks is the same price that it was back in 2019. Here's the thing I'm kind of looking at. So if we go to the net income, this wasn't some one-time adjustment. This is real losses, real declines, real margin collapse. If we look at the margin, it fell 50% year over year. It's really tough, but just kind of remember this number. They made $560 million of net income this quarter. It was a little less last quarter, but they made $560 million of net income this quarter. Look at how much just the dividend cost. The dividend cost $700 million a quarter. So they literally cannot afford the dividend. All of their net income got eaten up to dividends. So they had to, oh dang, they even issued some stock. I would be careful with Starbucks. I would rather buy McDonald's, to be honest with you. The only important thing that Hector is running. What up, RH? How's it going? Let's see. What app you're using? Yo, Annie Steens. Yeah, this is actually a broker that I'm on. If you want to get this software, it's free. It's in the link tree in my bio. It's that first link there. It's actually an affiliate link too. So if you go and deposit $100 on this app, we'll both get some free stocks. I keep my idle cash in here. Lowest fee broker, free. Like Robinhood, you got to pay $5 a month, but not with this one. I love them. Anyway, SEZL. So this is a stock I recommend you put on your watch list. This one has incredible fundamentals, in my opinion. So put this one on your watch list, but don't buy it right now. Everything about this company has impressed me. I mean, if we go to the revenue right here, this is the recipe for deserving this crazy stock price appreciation. If you go to the revenue, it's more than doubled. It's up 123% year over year. So they made $104 million of revenue And out of that 104 mil, 36 million of that was net income. The margins are ridiculous. Look at that. 20, 30, 40% net margins. That's what I like to see in a company. On top of that, they're deleveraging. Look, the liabilities same time last year was 84% of the assets. So look at that gap. But look at it now. It's only 57%. The assets are way higher than the liabilities. You now own more equity in the company. Everything's headed in the right direction over there. So that's why I think that one might deserve to be put on your watch list. Maybe buy the dip on that one. Yeah, hey, what up, S Records? Appreciate the nice words there. Yeah, that says a so BBAI. This is one I don't even want to cover it really. I just don't recommend this one. I don't really know how to analyze it. I mean, to be honest, here's the thing: $2 billion company. So the whole companies were 2 billion, and they lost in the past 2 quarters 200 million. So just the past 2 quarters, they've lost over 10% of the market cap. I would be careful with this one. They do have a little bit of sales, but it's not that growthy. It's up 5% year over year. They did just beef up the balance sheet because they were able to issue a bunch of shares and pay off debt with that. So let me actually see that so we can visualize that. So well, they not much anyway. BBAI. Yeah, I don't know if I buy that one. That one seems like a meme. Like swing trade kind of stock. We'll look at a few more here, then I gotta go. I really appreciate y'all being here, though. If you want to hit the follow button, again, I'm gonna do another live stream later tonight. Might ask how long it take for you to start understanding before it was overwhelming. It probably took like a year plus. Gold. Yeah, it took me a while. I've learned a lot of lessons, lost a lot of money, especially in my Weeble portfolio. We lost a lot of dollar hollers in here before. So, anywho, let's go back to Palantir right here. This company reports earnings later today. So in literally an hour and 30 minutes, this stock is either going to be up or down a bunch. So that'll be really interesting to see what happens with Palantir. We can kind of see what the analysts are expecting. A new record of revenue, record EPS. So, incredible metrics there. The government's half their revenue now. So many police stations use Palantir's data, and look at this, their software, it's up 45% year over year. So that's really incredible growth on the government revenue. And if you go to the commercial side, it's also up 33% year over year. Some really incredible growth on both segments of business. They're also making net income every quarter. Another fortress of a balance sheet. I mean, if we go to just they have no debt at all. If you go to the cash, $5.4 billion of cash, up from 3.8. So I love this company. I want exposure to them, but here's the bad news. On a price to sales ratio, so not price to net income, but price to total revenue, they're trading at 121 times sales. They need to literally double their revenue by 2030 for it to be somewhat reasonable. So it's a tough buy. When do you usually go live? On weekdays around this time every day. Let's see here. How do you like Novo Nordisk? Yeah, we'll look at Novo Nordisk again one last time. We've already looked at this one a few times. I want to look at, I'll be quick about this one. This is the Ozempic company. Then we'll look at Lyft and RIG. We'll look at them. But yeah, Novo Nordisk, they lose their patent for Ozempic in 2027, which sucks. And that's most of their revenue. Their obesity care products is 95% of the revenue. Their earnings for now are incredible, though. $4.2 billion of net income, 3.3% yield, very sustainable. The PE is dog cheap, a 13 PE. What's the industry average? Industry average is a 30 or 23. So super low PE ratio valuation, but I think it's the future growth that's concerning investors. So let's look at Lyft and then RIG. So here's Lyft. So this is, an Uber competitor here in the US. And look at that. Baidu and Lyft partner to deploy robotaxis in the UK. Robo-taxis, wait, isn't that Tesla, the name of Tesla's? Oh, well, I don't know. Anyway, if we go to Lyft right here, they're now the most profitable they've ever been. If you go to the free cash flow, look at these year-over-year growth rates. Just nuts. I mean, if we zoom out to last year, this free cash flow was negative every quarter. They were losing like 100 mil of free cash flow a quarter. Now it's exploded 300 mil this quarter. And if you go to the net income, they're finally net income positive. Made net income this quarter, made net income last quarter. So if we zoom out, they were losing a boat. Look. Dude, $500 million these quarters. They were losing a boatload of money. So they're finally the most profitable they've ever been. Free cash flow is the most profitable. So Lyft is interesting. So let's see here. RIG. So this stock reports earnings today, someone said. Transocean. So I've not heard of this stock before. A $2.4 billion company. So they're not that big of a stock. Contract drilling services. So they're in the oil and gas industry. And this is probably why the stock's struggling. They're not making any money. They actually lost 80 mil this quarter. So it's tough, man. It's kind of tough, these net income losses. So that's the one thing I would be careful with. The sales are good. Sales are up 18, but net income still negative. So yeah, but I guess earnings are today, so we'll wait for that. Gold said SUI. I threw in some money in this one. What is SUI? Let me know. Are you talking about Sun Communities? There's so many ticker symbols with this name. Is it? Oh my gosh, dude! I hate Apple, dude. Oh my gosh, look at this SUI. These are all the ticker symbols. There was more, but oh well. Apple keep wanting to autocorrect me. Okay, XLK, what is that, the ETF right here? So that's the technology ETF right here. So this ETF just focuses on tech. Let's see its top holdings. Yeah, Nvidia, Apple, Microsoft, Broadcom, Oracle, a lot of holdings that I would happily own individually. BTGD is Bitcoin and gold holdings. Wait, BTGD. They swap between major holdings depending on what's doing better. That sounds interesting. Let me check that out. BTGD, 100% Bitcoin, 100% gold ETF. What the? Yeah, let's go to its top holdings. So yeah, gold futures. So Bitcoin future, gold future. Huh. So that, I'll probably never buy them, but I'll put them on my watch list. This sounds interesting. Oh, Snapchat stock. Hey, my favorite quantum stocks are actually like Google, IBM, Oracle. They're not pure plays, but they're a lot better than like the Qubits, the QBTS, the RGTI. They're not good stocks. Yo, Kevin Mason said, "What platform are you using?" Yeah, hey, this is actually a broker right here. If you want to get it, go to that link tree in my bio, or the link tree in my bio right there. It's the very first link. It's an affiliate link too. So if you sign up and deposit $100, we'll both get some free stocks. But all the analysis tools are free. You don't actually have to do that. But yeah. Anyway, let's go look at Snapchat right here. Did y'all know Snapchat was publicly traded? And here's their stock right here. So I want to go and look at some of the details here. My Wi-Fi is bugging. Oh, my phone's doing better on battery. I can unplug it now. Probably drain that portable charger. So yeah, look at this net income. This is the one thing that Snapchat's been struggling with, but it's getting way better. If we zoom out, they were losing 300 mil a quarter. I don't even know how that's possible, but they're losing a lot of net income. But finally, it's starting to get close to positivity. They made net income last quarter. It's 54% better than the previous year. So that's the good news about Snapchat. We can also see another cool little data here. Daily active users is 560 million. That's a really cool stat, the daily active users there. So anyway, that's Snapchat stock. The free cash flow is really good too. Yeah, look at that, 100 mil of free cash flow this quarter. A lot of it gets eaten in stock-based comp though. I'll be looking at Home Depot. What do you think? I love Home Depot stock. Yeah, great dividend growth company. You get exposure to like kind of real estate, but like look at this right here. You get a 2.4% dividend with this company, and it's really sustainable. They even have room to raise their dividend. But check this out. The PE is a 25. That's kind of historically in line. I remember when lumber prices exploded, Home Depot did so good. But yeah, check this out. If you go to the net income, I mean, they're pretty much making 3 to 4 billion of net income every single quarter. And let's see how much their dividend costs. They made 3 to 4 billion of net income a quarter, and the dividend cost 2.29 billion every quarter. So they actually have room to raise the dividend more if they wanted to. So yeah, Home Depot is a cool one. SUI is fresh water. What's the name of it? Because I type in SUI. There's like Sun Communities, SUI, the Canadian one. I don't know what the company name is. So yeah, let's see here. BYD, is that let me know, are you talking about BYD Gaming or BYD, the car company? Well, hey, look at BYD. This stock's at an all-time high. So maybe you are talking about this one. Stock's at an all-time high, and the PE is a 12. Las Vegas locals. Oh, they're making 150, 100 million plus of net income a quarter. Interesting. All right, let's see. GCT, Amazing Financial. So let's see. Giga Cloud Technology. Oh, and we could look at Nebius too. That's a company owned by NVIDIA. So Giga Cloud Technologies, I would still be careful with this one. Like, look at this market cap. $820 million company. So a very small market cap on this company. But let's go look at their financials nonetheless. We can analyze them to see if they're a good buy. Earnings preview. So I think they report earnings kind of soon on August 7th. So yeah, later this week they report earnings. Off-platform e-commerce, GigaCloud 1P. Last mile delivery service. This sounds so, they're in ocean transportation. They're in a lot of industries. Like, geez. And hey, look at that. They are making net income every quarter. So this is a net income positive company. I got to do some more research on this company. $800 million company. They're in a lot of different industries there. But next up, we can find Nebius AI. That's actually an NVIDIA company. So check this out. We go to NVIDIA's portfolio right here. NBIS Nebius is one of their stocks. And there's one thing I really like about this company right here. It's the growth. So if we just go to the revenue right here, this is really impressive. The revenue went from 11 million to 55 million. So incredible growth on the revenue there. Again, NVIDIA owns it. I wouldn't buy something just because NVIDIA owns it, but still, that's really good in my opinion. And by the way, if y'all are enjoying the YouTube stream, make sure to drop a like for me. I'd really appreciate that. And if you want to hit the subscribe button, we're going to be live probably later tonight and tomorrow. We do a live stream every single day, but yo, I think that's going to wrap up the stream. I really appreciate y'all being here. Been live for 2 hours and 30 minutes. My head is starting to hurt. Oh, actually, you know what? Dat one dude. You know what? We'll look at GHM. One last really good stock. Here's a really good high quality stock. We'll do a little bit more research than normal on this company. So I do own this one right here. This is ticker symbol GHM. Yeah, what up, Dat one dude? So GHM stock. I do own 4 shares of this company. So again, this is such a risky company that you don't want to have a huge position in this stock. But let's see. Yeah, hey, QUBT, in my opinion, is not a good buy. Let's see, GHM stock. That one's really risky. There's no fundamentals there, really. Just a high market cap. It's just momentum. That stock is all just momentum right now. But yeah. Oh, I'll deal with that later. So Graham stock, this is at an all-time high right now. Look at this market cap. This is why I think there's a lot of upside potential, and this is also why you can't have a huge position in this company. They're a really small company, only worth $600 million, but here's why I bought them. The whole company's worth $600 million. You're buying a company that's literally making a couple million of net income every quarter. So, and it's growing like crazy. So what's it going to be this time next year? So guess we'll see what happens with that company. But yo, I'm going to give one last portfolio update, then I'm going to head out. Appreciate y'all being here. Yo, Will, appreciate you, man. Oh, I didn't get to your stock there. DHI. You know what? Because you're on the YouTube stream, I'll look at it. So this is a home builder. This is D.R. Horton. I love the home builder industry because they trade at a low valuation. You get high dividends. Like, look at this. The PE is a 12 for this company, so low valuation. And look at this. You get a 1% dividend yield. The payout ratio is an 8%. They literally have over double the dividend yield of Apple with half the payout ratio. So that's what's really cool about this home builder. Again, cyclical, but yeah, the net income did fall 24%. They're still making like $1 billion in net income a quarter. And yeah, all the revenue comes from home building. So yeah. Let me give y'all a quick portfolio update. Yeah, Virgil, get ready for AMD. We did analyze them earlier in the stream. By the way, for y'all on the TikTok stream, the best way to support me is go subscribe to my YouTube channel. I sell nothing. I don't have a course, book, Discord. Hey, thanks, Nikita, for the nice words. Yeah, I've been online for a long time, but I don't sell nothing. Watch out for people impersonating me. I'll never follow you. But the only thing I do have is a YouTube channel. So if you want to help me out, go subscribe to my YouTube channel. If you missed anything on the stream and want to replay it, go to the YouTube channel. It'll be on there for replay. The very beginning of the stream, like the first 10 minutes are really interesting. So yeah, anyway, hope you guys have a great rest of your day. Again, if you do want to download this little broker I'm on right here, it's my favorite one for analysis and stuff. I have an affiliate link in the link tree in my bio. So if you go and deposit $100, we'll both get some free stocks. I like it way more than Robinhood. Like, you can't really analyze a company on this app right here. But here's my Robinhood portfolio. I'll show you what I own in here. Wow, new intraday high. Let's go, man. These are all the stocks that we own in here. A lot of these you probably heard of, like Google, Meta, McDonald's. And then we also have our growthy Webull portfolio that we're up 16% all time in here. So not great performance, but yeah, these are all the stocks that we own in here. So yeah, get ready for earnings. I'll actually go over the earnings really quickly for this week. Here's everything that I'm watching. So if we kind of go to the earnings hub right here on Moomoo, and I'm going to search just by my watch list just so we can get the important companies. So yeah, Tuesday is so interesting. I own a lot of these. This is all on Tuesday, reporting earnings. AMD, Supermicro, Toast I own, Zeta, and Powell Industries. Whoa. And GHM, we just looked at GHM. GHM reports very soon. And then on Wednesday, we get Novo Nordisk. People have been talking about that one. I mentioned the app name. Yeah, hey, this is actually a brokerage again. Anist, if you want to get this brokerage that I'm on, it's in that link tree in my bio, the very first link there. It's a software you can get. But look at this. We get Disney, McDonald's, Uber, Shopify, Airbnb, AppLovin, Duolingo, TKO. Has anyone heard of TKO stock? They own, this is like the perfect ticker symbol. TKO owns the UFC and the WWE. So I guess if you like that, here's TKO stock. Here, I'll just show you that. If we go to the company right here, look at that. WWE is 30% of the revenue, and then the UFC is another 30%. So very niche stock, actually. So that's all on Wednesday. Thursday, we get, Eli Lilly, Constellation Energy, Monster. So basically, when a stock reports earnings, it moves the stock by a huge amount. They're either going to go up or down a bunch. So anyway, that'll be really interesting to see what happens. SEZL, SoundHound AI. So a lot of fun companies this week. So anyway, I hope you guys have a great rest of your Monday. If you want to hit the follow button, we'll be live later today, and I'll see you guys in the next stream. Have a great one. See you later. Hey, make sure to subscribe to the YouTube channel, link tree in bio, or you can type into YouTube Nathan Robert. See ya. And thanks for y'all on the YouTube stream. Y'all are the best ones because I've been trying to build up the YouTube channel. So hope you guys have a great rest of your day. See you later.